Jay is at the back, and he is my boss, and works with cooperative program and stewardship. And so the title of the office now is Stewardship and Church Financial Resources. And maybe in another year or two, I'll get that right first time. But this is a wonderful office, and I'm glad to be part of this office, and as we work together. And so the three of us, as we work together, it's Jay in the back and Laurie right here, and me, and we're glad to serve you in any way that we can. All right, so I wanted to start with this compensation planning guide, and if you'll take it out and let's open it up to page 2. I know we're starting with compensation, and that seems like a weird place to start, but it has to do with the fact that ministers are different. Now, I know some of you are thinking, yeah, our minister is weird. So you might be thinking that, but no, I'm talking about the way that ministers are treated is different. The way that they're treated from a tax standpoint is different than anybody else in society, really. And churches have some differences in the way that they're treated on a financial and tax and some of these things having to do with some of the legalities of things are a little different for churches than they are for other businesses. So as we do these workshops, we try to tell you about things that are different and how that works. Let me close this door real quick. Sure, you sure can. Good. Come on in, come right in. Okay, but we're going to take this booklet, Compensation Planning Guide. It's in your packet of materials, and open it up to page 2. And so all day today, we're going to be talking about how churches are different from a tax standpoint, from a legal standpoint, from a compensation standpoint, as we talk about ministers' compensation, which is different than anybody else. And so we're going to start with this one. This is put out by Guidestone. You can get copies of this for a committee meeting or some such, maybe a finance committee or personnel committee meeting at your church, and it's very helpful to go through. So as we do compensation planning, and therefore all the things we do about taxes and other things, this is a good guide. And so the first thing we want to do is we want to be good stewards, and that's what it says on the second page here, top of the page. We want to do what is right and what is biblical, and actually the Bible tells us not to muzzle the ox as it treads out the grain. Now, you and I might not be farmers. We might not know exactly what that's talking about, but you know, of course, the Bible was written for people who were in agriculture, and they knew exactly what it's talking about. And so, for ministers should be paid. The Bible also says, and the worker is worthy of his hire, and so they should be paid appropriately and to the best of the ability of that local church. The second thing that we see on this page is that there are some dangers of doing this incorrectly. There's some dangers to that. And so we want to do this right. We want to do it to help save taxes on the part of the minister. We want to avoid confusion. We want to do this well. And one of the things under number 2 that you see there is we could actually cause a hardship if we don't do this right. For example, what if a minister does not have life insurance? What if a minister doesn't have health insurance? What if a minister doesn't have a retirement plan? And I talk to ministers all the time who are of the mindset, hey, I'll never retire. My calling is for a lifetime. I'll never retire. And I understand that. Here I am, I'm 70 and I'm still working. And so So there is somewhat of a mindset, and yet still retirement is important. It's very, very important. You know, at 80 and 90 years of age, you're not going to be serving First Baptist Church of, you know, Dallas or something. Yeah, and you're probably not going to be in a full-time position at that point. You're probably going to be slowing down some. And even you might be facing some health issues that could cause you to slow down or to serve in a different way, or maybe not to be able to do the things that you once were able to do. So when we don't have insurance, or we don't have retirement plans, and we don't have these things at our church, that's detrimental to the ministers, and there could be a hardship. I get the call sometimes from a pastor, hey, I'm 63 and I'm disabled now. The church has been carrying me for a year, and I'm not going to let them do that anymore. I've got to quit. And so what do? And they don't have adequate retirement. They don't have disability insurance. They don't have these things that they need in order to be prepared for that. Sometimes we get an unfortunate call that a pastor has died and he doesn't have any life insurance. And so you want to, so what's your church, what would your church do if that were the case? Well, all of us would try to provide for that family until they can get on their feet. And that's going to be a long time. That might be 6 months, it might be a year, it might be even longer. Come on in. If you want to, any of the seats with packets.
Packet, okay.
Uh-huh. Good to have you, Carol.
Thank you. It's a long way from.
It is a long ways, and I appreciate you being here. I do. That's a long trip. I've made it. I've made it a number of times. All right. So not to do this could cause a financial hardship. And then number 3, down at the bottom of the page, you'll want to note that who is a minister for tax purposes. It's important that you and I understand this. A minister for tax purposes is one who is licensed or ordained, and they perform services as a minister. They're leading worship. They're leading the ordinances. They're leading the organization, and they're considered to be a religious leader by your church. So that's the qualifications to be a minister for tax purposes. Now, if they are a minister for tax purposes, then you see these bullets down at the bottom of page 2. You see these bullets that tell you that that minister is entitled to a housing allowance. That minister may do voluntary withholding, or they may do their own quarterly tax payments. They're not required for you to withhold on them unless you want to and they want to. And the other thing, and you'll see this wording here, it says these ministers must pay their own self-employment tax. That's their Social Security taxes. And notice that word must. They must pay their own Social Security taxes. Now, we're talking about ministers who serve churches. There are some other situations out there who have different tax status situations. But all day long today, we're going to be talking about a minister who serves a church. And if I just use the word minister casually without clarifying it, I'm going to be meaning this person, ordained and serves the church, leading worship, leading the ordinances, qualifies as a minister for tax purposes. Now, if you want to talk about a minister who does not qualify for this, we'll specify that, okay? So just to kind of clarify our definition here, that's what we're going to be talking about today. Any question about that? All right, so this booklet has a plan for you. And so as we go through step 1, and we're just going to go through it very quickly. Step 1, one important thing I need to say about page 2, we'll go back to page 2 here. It tells you that they are licensed or ordained and they serve performing these religious functions. And then I want you to notice the next sentence in that top paragraph under number 3, and it says, these ministers have a dual tax status. They're employees for federal tax purposes, and they're self-employed for Social Security purposes. How many of you have heard in your church, hey, our pastor is self-employed? Have you heard that? I've heard it, hopefully it's not said as much as it used to be. And a lot of times our pastors think, I'm self-employed. Well, you're really not. You're only self-employed for Social Security purposes. If you serve a church as pastor, youth minister, associate pastor, all those things, you are an employee of that church in every way but one. And the one way you're not an employee is for your Social Security taxes. So that's a very, very important distinction. Now, if you're interim pastor of a church, you might be a self-employed person. If you are you're supply preaching, you might be a self-employed person. If you are an evangelist, you probably are a self-employed person. And I'm talking about both ways. But when you serve as pastor, associate pastor, youth pastor, etc., and you are ordained, then you have this dual tax status. You're an employee for federal purposes, you're self-employed for Social Security purposes. Now, many of y'all have heard me say that many times. And the reason I say it is because that dual tax status says a whole lot about what you and I do. The 941, the W-2, how we, if we have workers' comp insurance, things of that nature, it's very important that we know that the pastor is employed by the church and is an employee in every way but Social Security. Any question about that? Okay, now that's where we start, because that's the most important thing that has to do with a whole lot of these other things. Okay, so step 1 is just simply a worksheet. You can kind of turn through those pages. Step 1 is a worksheet. Step 2 is establish written financial support procedures and policies. And it's very, very important that you put those things down in writing. How do you do this? How do you do compensation? How do you do housing allowance? How are our ministers compensated? What benefits do we provide as a church? And you put all of this in writing. What vacation do they have, and sick leave, and all those other kinds of things? You put all of that in writing, because I find that churches, and I've been doing this long enough, that I've seen that churches, they'll have a pastor come in, and he knows the way it's supposed to be done. He gets the church to do it the right way, but they didn't put it all in writing, and 10 years later, he's gone on to another church, and the church has gone right back to doing it the old way. And they've forgotten the proper and right way to do this. So it really needs to be in writing. Step 3, and I want us to go over this here because at this point, because we're not going to deal with it later in today's presentation, and that is provide for business-related expenses. Provide for business-related expenses. And so the top set of bullets on step 3, page 7, is the top set of bullets are the things that you can provide for as a business-related expense. And that can be for the use of the automobile or vehicle in business, functions. It can be for conferences and workshops. It can be for books and periodicals, things like that, in sermon preparation and ministry preparation. It could be for reimbursement of continuing education, and it can be for hospitality. Now, hospitality is a good word for us to use, and that means that the minister takes, say, a prospective family to lunch to find out about their spiritual needs and where they are spiritually, and answer their questions about the church, and say, hey, we'd love to have you come, love to have you be a part of us. Then that lunch could be reimbursed to the pastor. Now, some of your pastors, in doing something like that, they use the church credit card, and that's a fine way to do it also. But those are some things that we can use the business expenses for. And then down at the bottom of the page gives you the basic IRS requirements for those business expenses. And so first of all, it's got to be truly business related. So like, for example, your pastor could take the chairman of deacons, say, to lunch, and we're going to plan out the whole year's worth of meetings and what we're focusing on as a church and things like that. Now, then that would be a business lunch that he could get reimbursed for. He could also take that same person to lunch because they just like to go to lunch together. Now, that's not business, and so he doesn't get reimbursed for that one. And so that's hospitality. Could anything that has a business purpose to it could be reimbursed in that manner. Now, bottom of the page, mileage has to be dealt with in writing, and it's got to show the date, place, purpose, and number of miles. We've got to do a written report at least every 60 days. You can't go, 90 days. I don't hear as much from pastors, but I used to hear from pastors, they wanted to save it up and get a big check at the end of the year. No, you can't do that. You cannot reimburse something. And really, the policy here at the State Board of Missions, if you don't turn it in 60 days, it doesn't get reimbursed, period. Now, the IRS fudges on that a little bit. They say it's got to be a reasonable time period, and then they say a safe harbor for a reasonable time period is to be within 60 days. But here at the State Board of Missions, the definition just simply is, if you don't turn that report in 60 days, you don't get reimbursed. And it's that important. So we can't save it up for 3 months. We can't save it up for the whole year and try to get a big check or things like that as a reimbursement check. So we've got to follow these IRS guidelines that are here. And then everything's got to be done in writing. So if it involves a receipt, the receipt needs to be turned in and so forth. Now I want you to notice on the bottom of page 8, you should not, now this money for an accountable reimbursement, it does not belong to the minister. It does not belong to the employee. It's the church's money. And the employee receives it as they turn in reports to be reimbursed. So do not, let's say that we've got $4,000 in that budget and we've got $500 left at the end of the year. Don't give them that money. That's not theirs. And also, by the same token, it should not be taken from salary reduction to provide for business expenses. And that's what it says at the bottom of page 8. See that caution triangle there and that big circle, and it's highlighted and everything here at the bottom of the page. You cannot do this from salary reduction. It must come from employer funds, not employee funds. So this is the way to do an accountable business reimbursement and the proper way to do it. Now, changes that have happened since 2018. I know 2018 seems like a long time ago for many of us, but I still find pastors who don't understand this yet. They cannot take it off of their taxes at all. See so let's say they're not reimbursed for a business expense, and they say, well, I'll just put it on my taxes. And they probably put it all in a shoebox and take it to their accountant and say, you know, and then they don't think about it ever again. What's that accountant gonna do with that? Nothing. He can't. There used to be a section in the tax forms that said employee unreimbursed business expense. Employee unreimbursed business expense. That line is gone since 2018. So as a minister, to get something taken off my taxes because it was a business expense that I did not get reimbursed, the amount that I can write off is zero, not any. Now, to help confuse you a little bit more, let me say this, that many ministers do have some self-employment income. They might preach at another church. They might do a revival for another church. They might do a wedding and get paid. They might do a funeral and get paid. They might do something else and get paid. Those are truly self-employment. That wasn't through the church, or the money didn't go through the church. And so those things, I once did a funeral that I drove over 400 miles that day. And so I can write that. I did the funeral, I did get paid, I can write that off. But I would write it off related to my self-employment income. See how that works? And so they do have some self-employment, but what we're talking about today is their church employment. And for that, they cannot write off one dime of business expense. Okay, everybody together on that?
Does that include mileage?
Yes.
Okay, so the mileage too, the only thing that it can do is that self-employed part of the mileage.
The self-employment part. So like, for example, that funeral, I could write off the mileage. If I had to stay overnight, maybe the visitation is, one night and funeral's the next day. If I had to stay overnight, I could count hotel, I could count my meal, related to that, having to stay overnight, that sort of thing. But that's self-employment income. But for my church, I can't write off any. Okay? That's a good question. This is all important.
A kink in it, and I think I know the answer. If it was a church member you traveled that far for a funeral, would it then be all church-related expense?
Okay. If it's a church, and I'm glad you asked that question. What if that funeral was a church member? And so the church could reimburse me for my mileage, or if I had to stay overnight, they could reimburse me for the hotel. The church could reimburse me for that because the person who passed away is a church member. That could happen. But, sometimes when I drive that far, it may be for a church member in a church where I served in years past. And so it's not related to the current church. It's not related to the current church. Yes, sir.
So just to clarify, if it was a church member, family had a death, pastor does a service.
Mm-hmm.
If the church writes money, it comes from church funds, so that's reimbursement. If
That's
the
reimbursement.
family says, we would like to give you this for blah, blah, then that would be under the self-employment.
It would, and you can have possibility of both the church reimbursing for the mileage and the family giving an honorarium as payment for doing the funeral. You can have both, and that could happen. Now, let me say one thing. From time to time today, I'll get on my soapbox about a few things. Let me get on my soapbox for just a second. As a church, be generous with this situation. I've heard of, so let's say that a member of a church that I used to serve died. I've got to drive 400 miles to go do their funeral. I've been asked to do it, and I've got to drive, and that that church doesn't pay me a dime. I mean, that family doesn't pay me a dime. If that minister wants to turn in that mileage to your church, which doesn't have to do with that person passing away, be generous on that. Allow it. Allow it, within reason I'm talking about, but allow that sort of thing. Because there's a whole bunch of funerals and sometimes weddings, you don't get paid a dime. And, and what if you did drive all that way? The current mileage rate is 67 cents per mile for 24. So I think the church should be generous in those situations. Especially a funeral. Because, if you have somebody that you knew 20 years ago and that family wants you to do their, I did a funeral for a lady a few months ago, and this is kind of the way that I do funerals. I don't do funerals for current situations, but for past. But I did a funeral for a lady that we were in the same church 45 years ago. And that was the most recent, and we've kept up through those years. But, but that was an unusual funeral. But anyway, be generous in those situations, because for me to say no to that family, I'd be just the biggest jerk there ever was. Isn't that right? Say no to a funeral is, yes, sometimes you can't help it. You have to say no. You've got something you just cannot change and you cannot get out of. But other than that, you pretty well have to say yes to doing a funeral. Okay, I'll get off that. All right, now, so page 8, this must come from church funds, not employee funds, in order to set up an accountable reimbursement plan. And so that's the way that we need to do it. Now, on pages 9 and 10, talk about benefits, and we should provide all the benefits that we can provide. Even bivocational churches pay a little over $20,000 per year on average. And when the bivocational church, the size of the church is like between 50 and 100, it's more like a little over 30,000 on average. And so they pay that, and bivocational churches on average provide about $1,500 worth of actual benefits paid to for the benefit. Usually because that's not a whole lot of money, that's not going to pay for health insurance, is it? So usually when it's something of that nature in that sort of realm, then that's usually retirement contributions. And those bivocational churches should be making those retirement contributions. But what I'm saying here is, if the bivocational churches can do some benefits, all of us should be doing benefits, and benefits to the best that we can do. And so those benefits could include retirement contributions. It could include health insurance, life insurance, disability insurance, and so forth. And I will say that Guidestone is a good source for those. Now, one more thing I want to say, and I'll mention Guidestone once again. On the next page, it talks about retirement. Now, retirement, we have, through Guidestone, we have the church retirement plan. And the church retirement plan is unique in that a minister can put money into the church retirement plan, and they could put money in tax deferred, meaning I'm saving on taxes today as I put the money in, and as the church puts money in for me, I'm saving on taxes because I'm not paying any taxes on that. And I'm not only not paying federal income tax on that money, I'm not paying state income tax on that money, and I'm also not paying Social Security tax on that money, which is a little different from regular employees. And so I can save on all those taxes now, putting that money in. That's significant savings. And then someday, when I do retire, I can take that money out and I can take it out as a tax-free housing allowance. Okay, you got that? I can't do that through Vanguard. I can't do that through my IRA. And I can only do that through a church retirement plan. We have the church retirement plan through Guidestone. So see how that's so important? If you've got a minister who has a Roth IRA, and especially if they've got it through somebody else, have them call me. That may be a good product. It might be a wonderful product, but they really ought to put their first dollars into the church retirement plan through Guidestone. Because you can't, what I'm talking about here, the tax savings and the tax savings in that someday I can take it out and for the housing allowance part, not pay federal income tax or state income tax or, well, see, when you're doing retirement, you don't pay Social Security taxes anymore when you quit working. Did y'all know that? When you quit working, you're no longer paying Social Security taxes. And so, and so I won't be paying any tax whatsoever on the part that I can count as housing allowance. And that's just a wonderful possibility for a minister.
Is there a limit on what you can take for a housing allowance?
There's no real set limit. We're going to talk about housing in a little bit, but well, in fact, we're going to talk about it in a minute. There's no set limit. There's not a percentage limit. There's not a dollar limit. So some of our bivocational pastors ask for 100% of their pay as housing allowance. And there's no dollar limit on it, but it does have to fit your situation. So a minister, and I usually don't tell this crowd this, I usually tell this in February when I'm talking mostly to ministers, but a minister is limited to the smallest of three numbers. What did I ask for and got approved from the church, number one. Number two, what did I actually spend? And number three, what is the fair market rental value of my home furnished plus utilities? So, so those become the limit. And so housing allowance is limited, but it's limited because of my situation. Like, for example, let me give, well, hold that thought for just a minute. And I'm going to, I'm going to get there in fact, next. That's next. So retirement plan, church retirement plan through Guidestone is awesome. And your ministers need to be involved in it. And all your paid employees really need to be involved in it. They do a great job with our money. And if you work 20 hours a week or more, and you get paid by a Southern Baptist church, and you participate in the church retirement plan, then you can get some extra benefits. One is similar to life insurance. It's called a survivor benefit. We'll look at that sheet in a little while. And another is a small disability benefit. And then the third benefit is for ministers, but you don't have to be ordained for this. But the third benefit is for ministers, and that is that they can receive basically $210 a year from State Board of Admissions going into their retirement accounts. And that just happened. We used to do $17.50 a month, but Guidestone wanted to do this on an annual basis now rather than monthly basis. So it's now $210 a year. And the last 3 years, we've been able to do $250 instead of the $210 for any ministers who met those qualifications. So, so that's a wonderful thing. Now, so the next step is step 5, determine personal income. And we'll talk mainly about housing allowance because that's the unique thing here is housing allowance. And so at the bottom of page, what page is that? Step 5. Was it 13, 12? Anyway, at the bottom of the page it says step 1, the minister requests housing. He'll use the form that we've got here and request that housing based on this form. And then the next page, step 2, the church must officially approve and designate that amount as housing allowance. And while we're on this step 2, it can't be done retroactively. So we can't make it, we got to the end of 2023, we forgot to do housing allowance, so we can't make that retroactive back to the beginning of 2023. If we are in the middle of the year, we can't do something retroactive back to the first part of the year. You can change it in the middle of the year, but that change is from that point forward, And so the church would officially approve that housing allowance, and then they should use this wording that's here under step 2 that says that this housing allowance is in effect for 2024 and all future years until changed by church action. Also, above that, you'll see the sample form for filling out for housing allowance, and that includes the payment, principal, interest, taxes, insurance. It includes utilities, it includes furnishings, maintenance, upkeep, remodeling. Any of those things count towards housing allowance. And so then that's how we do housing allowance, and then we put step 6, we put it all together into a comprehensive plan. Before we go beyond this booklet, let me ask you, what questions do you have about housing allowance? Yes, ma'am.
When you said that at retirement, they could designate what they pull out as housing, do they still have to be actively being a minister?
I'm glad you asked that question. They do not.
Okay.
They do not. In fact, see, and the other denominations have it too, but Guidestone is a denominational board. It used to be called the Annuity Board of the Southern Baptist Convention. And so it is a church plan. It's a special plan of the tax code. And so the Guidestone actually has the authority to authorize housing allowance for a retired minister. Now, when I'm still working, so I'm still working part-time, I take my housing allowance from the State Board of Missions. And then when I do fully retire from the State Board of Missions, then I'll take my housing allowance from Guidestone. And they have the authority to be able to do it. I don't have to be still serving a church to do that. That's a great question. Yes, ma'am.
And you said that it needed to be approved the first of the year.
Should be.
Could it be approved the first of the associational year? Or does it need to be like?
Yes, you can do it from, say, October through September. I would just specify those months and how you're doing it. And you could say this housing allowance is in effect for October 23 through September 24, and all future years until changed. You certainly can do it, that kind of wording. On that kind of wording, I'd be very specific to probably even state the months from here to here. And it can be changed during the year, but yes, it can be done on that basis. Good question.
We've already, we have approved our budget for 2024 for the church, so we've already had that church meeting. But I didn't do one of these forms for the pastor.
Okay.
So, do I just need to get one of these to him now?
Did,
It wasn't itemized out, of course, with the church, we just had salaries, groups, like you're supposed to do. But it was based on what his housing was last year.
okay.
It has been since he's been there.
Well, how did y'all do, okay, so is it listed, so how, we're talking about housing allowance, is it listed in the 24 budget?
Yes.
Okay, so that's fine. it just needs to be approved in writing, in writing could be, it's voted on as a resolution in the business meeting. Could be, it's listed in the budget and we approve the budget. It could be even that some of our churches, they lump the salaries together into one, and so say a committee, finance committee, personnel committee, somebody approves the housing allowances. But it can be done by a committee, and that committee is acting on behalf of the church. As long as it has some kind of official approval to it.
We don't have to have this actual page, whatever it is, 15.
No, the page is not required.
I mean, we don't have to have this actual worksheet in the.
It's not required. Yeah, the pastor could just say, I want $20,000 to be housing allowance. And he would typically put that in some kind of a memo. And now, here at State Board of Admissions, we use the exact form that you see here. And I think most of us just turn it in. Some pastors might be concerned, hey, I don't want them to know what my house payment is, so forth. Well, that's fine, they don't have to. It never bothered me, so I just fill it out and turn in the whole form as my request.
Well, we provide the house, when we have a parsonage.
Okay, you have parsonage,
Really
okay.
considering utilities, I guess, not really having one.
The pastor then in that case could have the utilities, his insurance that he purchases, he should get insurance, and anything that would be his responsibility. Like, now if he wants to get down to a really detailed, you could talk about pest control, and you could talk about light bulbs, and you could deal with, those kinds
We
of
pay
things.
all that.
You pay all that, okay. What about utilities? Do you pay all the
He actually
utilities?
pays it, but I mean, he gets that monthly amount.
Okay.
Under housing utility. We
Okay,
just called it that as opposed to allowances.
Yeah. so that allowance that y'all are giving him, that would be in effect housing allowance.
Right.
And also his internet, home internet, does the church pay for that, or does he pay for that?
That was determined when he determined his amount
Okay,
he wanted, so. Okay, I just
Okay.
make sure we didn't have to have this actual form, because I don't have this.
yeah, you don't have to do the actual form. That's a good question. Yes, sir.
Would something along the lines of renter's insurance be on him or the church?
Well, he has to get his own renter's insurance. He's covering his content and himself. So the church can only cover the house. But he's got to cover his contents, and he's also got to cover, what if somebody comes to my house and they fall and hurt themselves, and that's a liability. He's got to have his own liability insurance, which is part of renter's insurance. And renter's insurance is very inexpensive, but still, that's a part of housing. That's a good question. Okay, so this booklet, I wanted to start, I've never started with this booklet before, but I wanted to start with it because it's so important. It points to the minister is different and treated differently on a tax basis, and the minister has a dual tax status, and therefore many of the other things that we do as a church and as we do forums and things like that, those things are different than they would be for a regular business. And that forms a basis for the things that we're going to talk about today. All right, let's take this form that you see that says 2024 tax changes and what's new. And, go ahead and open it up just to show you where I submitted the 24 book to Lori yesterday, I think it was. And so eventually this will be a 24 book, and it'll have these changes in it. But it's the section that's about page 69, I think, something like that. Talks about tax changes and sample policies. page 68, page 68. So this form that gives the new 2024 stuff corresponds to this page in your 2023 book. All right, so what is new? What is new? Let's talk about that. And so the IRS business mileage rate, you'll notice that you've got a blank here because when we printed the form, we didn't have it yet, but it's 67 cents per mile for 2024. 67 cents per mile for 2024. It's interesting, the IRS always sets, and they used to set it the 1st of December. Now it's late in December, sometimes after Christmas, before they set the mileage rate. But it's interesting what they did for 2024. You'll notice in the book here, Dot, and on your page here, you've got another blank that is for medical purposes. And you know what that one did? It went down 2 cents. So the business mileage rate went up 1.5 cents. The medical went down 2 cents. And that's the amount that when you go to the doctor, when you go to get, x-ray done or physical therapy or things like that, you can count that medical mileage and you can write that off as a medical expense on your taxes. Now, why in the world would one go up and the other go down? You have any idea? It has to do with, out of the 67 cents, what is the largest portion of that 67 cents?
Yes.
It's not gas. Let's look at it this way. If you had a car that, if gas was $4 a gallon, which it's not now, I paid $2.50 the other day. I was excited about that. But if gas was $4 a gallon and you got 20 miles to the gallon, then you're spending 20 cents a mile on gas. So what makes the big part of 67 cents? It's depreciation. Depreciation. That car is going down, now Dave Ramsey says it's going down like a rock. And it is. You're spending, hundreds and hundreds of dollars every month on depreciation. And not realize, we don't feel it. You don't realize it until you try to sell it. Now, in fact, you know what the average car price for a new car in America today is?
67.
Just under 50,000. Just under 50,000. You know what the average used car price is in America today? About 25,000. And so you take that $50,000 car, in 4 years it'll be worth less than half. So let's say that it's worth, it went from 50 down to 20 in 4 years. So you lost $30,000 in 4 years. You don't really feel it, but that's a lot of money. It's a lot of money. And depreciation is the largest part of that. So for business mileage, they're trying to reimburse the average cost of operating a vehicle for a mile. And on the medical, they're really just trying to reimburse you gas and oil. They're not trying to do much more than that. That's why one went up and as you know, gas prices have gone down during the last 6 to 8 months.
And what is the rate for the medical?
It's 2 cents less. So it's what, 19?
20.
What was last year?
22.
22. So that doesn't sound right because I was thinking it's 19. At the break, I'll look it up. But anyway, it did go down 2 cents. But the important thing is the business mileage rate is 67 cents per mile. That's for 24. If this month you're reimbursing somebody for a December mileage report, you're going to reimburse that at the 65.5. But once you start reimbursing for January and on, you can reimburse at 67. Now, this is very, very, very important. Alabama changes. And this is I think the most unusual thing for Alabama in the whole time that I've been doing this. I usually don't talk about Alabama very much. Alabama, the tax rate is about 5%, but most people have very generous deductions, and they end up paying closer to 3% of their income in Alabama tax and so forth. So I don't talk about it very much, and you know, we don't have the methodology to really tell you what your Alabama tax is going to be as easily as we can on federal. So here's some changes that are happening in Alabama taxes, and Alabama's trying to give us money back. Isn't that weird? Have you ever known Alabama to have so much money that Alabama is trying to give us money back? And so in December, if you're married and filed jointly in 21, you got a $300 extra bonus in your bank account in December of 23. And if you didn't file electronically with some kind of payment method or something, they're going to send you a actual check for that. Married filing jointly, single, you get half of that. You get $150. How many of y'all have gotten your money? Okay, so just about everybody. Alabama's trying to give us some money back. Due to the COVID things and not spending as much money and some of the bonuses from the federal government to the states, this is one of the ways that they chose to give some money back. But the other one is this, and this one is more complicated. There is a new situation where Alabama taxpayers who work overtime will not pay tax on those overtime hours. Have you heard about that? Okay. How many of y'all, as a church, how many of y'all paid overtime anytime during 2023? Nobody? Okay. I asked Joella, and the State Board of Missions did not either. Okay, so if we are supposed to report to Alabama how much overtime amounts we paid in 23, which for those of us in this room, it's going to be 0. And then in 24, if you pay overtime hour, that is not subject to Alabama tax. The overtime hour. And the whole thing is not. It's not subject to Alabama tax. Wow. So many of us as churches, as a practice, we tell our folks, hey, we don't pay overtime, don't work any overtime. But if you get in a position where they actually did work overtime, you've got to pay it. So don't do something illegal here to avoid paying overtime. If somebody does pay it, they're entitled to it, and you as a church could get in trouble if you don't pay it, and you could get fined $10,000 fine if you don't pay overtime, which is due. So many of us have policies against paying overtime. Many of us try to work it out with our employee to make sure their hours are under 40 by the time the work week ends and things like that. So I had a feeling that nobody in the room was going to have paid overtime. But just remember, if you do pay overtime, then you got to pay it. If they worked it, you got to pay it. And even if you got a policy against paying overtime, if they worked it and turned it in on their timesheet, you've got to pay it. And then if you've got to pay it, you don't pay tax on the Alabama taxes on that. You do pay, that person's going to pay federal income tax on it. They're going to pay Social Security taxes on it, but they're not going to pay Alabama income tax on that overtime pay. So just be aware of that. How many of y'all, you've heard from your software, your church software, that they're going to handle that Alabama thing for you? Anybody know? I was thinking that ACS was going to do it. Will they do? How many of y'all use ACS or Realm? Have they said it?
I haven't gotten anything.
You haven't gotten your updates and that stuff yet?
Yes, I hadn't checked for updates yet, so.
I would be surprised if they didn't. And some of the church softwares, they might do this for you and make it easy for you. Okay, so be aware of that about overtime. It's gonna be really important. And I bet your workers, if they ever do work overtime, they'll probably remember that. Hey, I'm not supposed to pay Alabama tax on this. All right, so, now, I still have it in the book, and now, the one other thing that I was gonna mention, yeah, the bottom of this slide, bottom of your page here, electronic filing requirements for W-2s. If you have a grand total of 10 W-2s and 1099s, you now have to electronically file. Everybody aware of that? Count them up. Count up your employees, count up your W-2s and your 1099s. If you have a total of 10, you've got to electronically file. And the Social Security Administration has an electronic method. They have that on their website. The IRS has a thing called IRIS, I-R-I-S, and for their electronic payment system. And so look those up, and your software, hopefully your software, does ACS Realm, do they do electronic filing for you?
There is an option
There's an option,
to do that.
okay? I imagine that the software companies will probably do it. You know, it might be optional, it might be extra cost, but they'll probably do it for you. Now,
It is extra.
it is extra cost. Does QuickBooks do it? QuickBooks does it, okay. I'm glad you're here that I could ask that, because I thought they probably
Yeah,
would.
they do.
Do they charge extra for it?
Yes, they do.
Yeah, I thought they would. Now, if you do it through the IRS, my understanding is that's not gonna cost you anything. And from people who have converted, some people have converted from manually doing it and paper and all that stuff to now, what I understand is you still have to print the form to give to your employee, but your submittal of everything is gonna be electronic. But people who have gotten into electronic filing prior to this, once they've gotten it set up, they've been very pleased with it, and that they like it, it's easier, and once they've done it, they really enjoy that. So anybody want to say yay or nay that you liked it, or you didn't like it, or it was hard?
I use an online service called Yearly because we only have one W-2.
Okay,
It's $6 a form, and they handle it like all you have to do is key it in, and then it submits it, and then you get a report back when it's been accepted.
that's good. That's really good. And I'll mention to you, if some of you are in a, small to large church, either one, you are tired of payroll, you hate payroll, you don't really have enough help to get payroll done and all the other things you gotta get done, there is a company called ministryworks.com. Ministryworks.com. It's a subsidiary of Brotherhood Mutual Insurance. You know, Brotherhood Mutual specializes in churches, and that's the partnership arrangement with Guidestone Property and Casualty. But Brotherhood Mutual has ministryworks.com. They'll do payroll for you, and you can look it up. You can go to ministryworks.com, and you could put in how many employees you have and how often you pay, and they'll tell you how much it'll cost to do payroll through them. And if you do payroll through them, you can do your other forms, 941s and all that stuff through them as well. So that might make it easier. But many of you, how many of you think you're gonna have to do electronic filing of your W-2s? Okay, several of you, not all of you.
Yeah.
Okay, y'all are, all right. So many of us are going to have to, And it won't be long and we'll all be required to do electronic, and this stuff will become a lot more normal.
Clarification, is it 10 W-2s and 10 1099s, or
It is 10 total,
or then 10 together?
10 together, 10 total forms, W-2s and 1099s. You add those all up, and if it totals 10, you got to do it. Mhm. All right. Okay. So now the rest of this, we're back in this book, your main book on page 68. And I'm just going to mention a few things, then we're going to take a break. Child tax credit remains at $2,000 per child under age 17. And then the next thing I want to mention is W-4. Is anybody still using the old W-4? You should be using the new W-4. Okay? All right, good. You should be using the new W-4. It's really easy. It's easy for the employee. And the only thing that you really get messed up on about the W-4, if they have two jobs, or husband and wife both work, or things like that, make sure they check that box on number 2. Because if they don't check that box, then they could get messed up. They could pay way too little tax. So you see, the standard deduction for a married couple for 2024 is going to be $29,000. That's your standard deduction. And so if I'm an employee and I tell you I'm married filing jointly and I don't check that box in number 2, then it's going to, my first $29,000, it's not going to charge tax, not going to charge federal tax on that. Now, that doesn't mean that I'm going to, work third and half of the year and before I start paying taxes. They'll figure it out for the whole year, but that first $29,000 I won't be paying taxes on. If we're both working, or I have 2 jobs or whatever, and I do check that box, then it applies a standard deduction of half of that amount. And so if both husband and wife are working, they both check that box, they're gonna be okay. But if they don't check that box on number 2, they're gonna be in trouble. And so make sure your employees do that if they have a situation of husband and wife working or 2 jobs. Now, while we're here, in your packet, I want you to take out a form. And it says 2024 Minister Estimate of Taxes. Minister Estimate of Taxes. Now, the W-4 doesn't work well for ministers. It's not going to work well. Ministers have this housing allowance that the W-4 doesn't account for. Ministers have to pay their own self-employment tax, even though they are an employee, and so forth. So what I've done is an estimate of tax, accounting for those things, and here's my goal. I wanted to get it done on one piece of paper, on one page. I wanted to make it simple. If the IRS were to do this page, it would be at least 7 to 10 pages. And I did it, I'll tell you, I did it wrong. So I did tell you that first. Here's how I did it wrong. And I'll tell you how I did it wrong because I want you to know. First of all, there are tax brackets. We pay 0 tax on some of our money. Did you realize that? That's the standard deduction. We pay a 10% rate on part of our money. That's about the next $20,000. We pay a 12% tax rate on part of our money. And then if you make over about, well, just to use round numbers, if you make over $100,000, now I'm talking about a married couple, if you make over 100,000, then you start to go into the 22% tax range. So I'm thinking that most ministers, and especially when you consider housing allowance, that most ministers don't go into the 22% tax bracket. So most ministers are going to be in the 10 and 12. And since those are two tax brackets close together, I just use 12. And so this form is going to estimate just a tiny bit high. It's going to estimate a little bit high, and then the calculation for the other parts of the calculation are correct. And the part for SE tax is exact. And so it's going to estimate just a little bit high. Now, the other part that I did wrong is I did not account for 22% tax bracket and up. And so, you know, if you're a minister, and what I said at the top of the page, this page will work for somebody with thinking about housing allowance, somewhere in the range of about 130,000 family income. Family income. And if they make more than that, then this form's not going to work. So I've stated that on the form, these two problems that I have with the form, but I think it'll work for many or most ministers. And that's how you can help them to estimate their taxes. All right. The other thing that I want to mention while we're talking about stuff that's new, you've got a sheet about it in your packet. So Guidestone has made a few changes. Contributions must now be $50 a month in order to get the extra benefits from Guidestone and the State Board of Admissions. You know, it used to be you could contribute $1 and get these extra benefits, but now it's $50 a month, and that contribution could be from the church, from the employee, either or both. And then the survivor benefit, that's the one that acts like life insurance, that one is unchanged. And the disability benefit is now limited to 5 years, and it's also limited to age 65. So if I was on this, I'm contributing to my retirement account, I am contributing $50 or more, a part of Southern Baptist Church, and I got disabled at 62, but I'm just going to get 3 years worth of that disability payment. And then finally, I mentioned this a moment ago, $17.50 a month for ministers. That has been changed to an annual contribution of $210, and we've been making $250 for the last couple of years, and that comes from the State Board of Admissions. So you do have to have these things that you're involved in order to get the extra benefits. If you have any questions about that, or if your minister is not sure whether they got it or not, have them check their statement, and they should have gotten the $250 in early December. I think is when it was done, early December.
Question, please. If I'm looking at it from my end, where I can go on Guidestone and see all of our employees, will it show their $250 on my end, or will it just show on their private statement?
I think you can see it. You see their contributions? You see all the contributions that go in?
I think so.
I think you do.
Okay.
And I think you would be able to see it.
Okay.
Now, minister here does not have to be ordained. They just have to be a minister. So your children's minister, your youth minister who are maybe not ordained, that sort of thing, they can get that $250 also. Okay. All right. I want to say that now this was done last year. The Secure Act 2.0 provided some, and this is not in your book, but it provided some extra good things about retirement. And one of the things, it raised the age of required minimum distribution. If they hadn't raised that age, I'd be at that age, right now. and be facing the required minimum distribution. They raised the age to 73. Those of you who were born in 1960 and later, it's raised to age 75. Another thing that it did, and this is one of the, I'm not going to mention all the things it did, but the other thing that it did that I think is really significant is many people are worried about their saving money for their child who may go to college. And a lot of people are thinking, gosh, college is so extremely expensive these days, and what if my child doesn't go to college, and what if I put all this money into a 529, and what if they don't go, and things like that, or what if they don't need it, so forth. And parents have all those questions. You don't have to worry about that as much as you used to, because you will be able to, let's say you have 529 money, and your child doesn't go, or doesn't need it, or doesn't need that much, or whatever happens, you can put that money into a Roth IRA on behalf of that child. Now, they've got, the contributions would have to be going on for 15 years or more. You can't just do it 1 year and they get the money in the Roth IRA the next year. But that's a wonderful thing about college money, and the possibility of how, even if they don't go to college or don't need the money like you thought they might, it can be a wonderful benefit for that now adult child. Okay, that's all I'm going to say about that. There's just some good things going on in that area. Let's take a 5-minute break, and we will come back and we will talk about year-end procedures. Okay? All right.
Yeah.
In your book, we're on page 107. And let me say to those who are online today, this book is online, and you go to alsbom.org, that's alsbom.org/CCS. And then on that page, look at Administrator Resources. Administrator Resources, and this entire book is online. Soon we'll have the 2024 version of the book online, but anyway, so we're on page 107 of this book, and that online resource is alsbom.org/CCS. The CCS stands for Church Compensation Services. One of my favorite people in terms of tax, he's a tax attorney, and the person who is most known in national circles among churches is Richard Hammer. And he writes a tax guide for ministers that's about this thick, about 60 pages. He writes a tax guide for ministers and churches that's 700 and something pages, and updates that book every year. He is the nation's leading tax expert for churches and ministers, and he puts together an article that he updates every year. And I have used that article because it's well done. My version of it is not 100% exactly like his, but I've gotten the gist of his article. And if you want to find it, you can find it online. Just look up Richard Hammer year-end procedures, and you should be able to find that. He writes for Christianity Today, and that's where his the website is churchlawandtax.com, churchlawandtax.com. We will get to a place in your book that I need to correct that, and I'll show you where it is as we get there. So these are some things that we all need to do at the end of the year. And so number one is the end of the year is the right time to do housing allowance, and to make sure that the ministers have submitted their housing allowance and that those have been approved. It really should be done every year. and every year gives those ministers an opportunity to update it. Now, they can update it in the middle of the year, but a lot of times they forget and things like that. But if you don't update it every year, then you must have that wording in there that says this housing allowance is for this and all future years until changed. But it is good for them to go through the exercise of updating it, and we do that at State Board of Admissions every year. And let me say how we do some of these things that we're going to be talking about forms and year-end procedures, things like that. It's real easy here at the State Board of Admissions. We have an amazing compliance here, better than any place else I've ever seen. And because if you don't turn in your housing allowance form, then comes around to January 1st, what happens? You don't have a housing allowance. If you don't turn in your W-4 and A-4 and those forms about stuff for this coming, for this year, we did these in December. And if you don't turn in those forms, then it comes around to January, what happens? You don't get a paycheck. So, it's just real easy, and it's amazing that with that being the way that things are done here, it's amazing what kind of compliance we have. I don't know of anybody who doesn't get that done. Now, sometimes they do have to ask somebody, hey, you forgot to do your form, but when that person is reminded about it, they always seem to get it done by the first of the year. So it is a good idea to do housing every year. We at the State Board of Admissions, for those of us who are ministers on staff, we do have to do our housing form every year. And so that is a good practice. Some things change. I know my property taxes have gone up tremendously these last couple of years. And so it's good for me to update that form. I've been shocked. I've been really shocked by property taxes. And of course, insurance has probably gone up as well. And so it's good to update those forms every year. You should use this wording that says that this is in effect for this and all future years until changed. And of course, your ministers need to know that if they need to make a change, they can do so throughout the year, in the middle of the year, if they need to. So as we talked about a minute ago, it's a two-step process. The minister submits the request for housing. Step 2, the church must officially approve that request. Now that approval can come in a resolution and business meeting, could be listed in the church budget and printed and voted on as a part of the church budget, or it could be approved by a committee if that's the way your church wants to do it. Second thing on Hammer's list and in your book, the second thing is now's the time to get the W4 forms done. And we talked about that for a minute in the last session. And for your ministers, they should write on there their request for additional withholding than what is typically called for, and that there's a way they can do that, or they could say do not withhold for an ordained minister, and they can do their own quarterly estimated tax payments. But still, they should do a W-4 to let you know that's what they want to do, and they're letting you know in writing what they want you to do. We talked about the W-4 form last session. We talked also about this estimated tax form for ministers that I have, and you've got a copy of it. Also, there's a copy on the website. It's alsbaum.org/CCS. And there's a copy there if they want to find it there.
Question, please.
Yes.
Instead of requiring our employees to do totally new forms every year, I do give them a page that says this is what you're currently withholding.
Mm-hmm.
Is this, do you want to continue it? Do you want to update? And they check that for me and sign. If they want to update, I give them forms, they do it. If they don't, we just go along with where they are. Is that okay?
It is, the IRS says that they're supposed to do it, but there's no penalty for not doing it. The worst thing that can happen is they go along for several years and they don't pay attention to what's going on, and all of a sudden, they've got a big tax bill. But, but what you're doing is okay. I mean, in terms of the IRS would tell you that, the IRS would say, do the W-4, but there's no penalty for not doing it, so.
I require it of the ministers.
Yeah, so I think you're,
They all fill out one every year.
so from a practical sense, I think you're okay with what you're doing. I think you are. All right, year-end forms, this is the time to do those year-end forms. And one of the forms that you should be doing is we've always called them a salary reduction agreement. That's about your retirement. But now I know Guidestone calls them a contribution agreement, that the employees agreeing to take some out of their salary to contribute to their retirement account. And I think that, I very strongly believe that every Southern Baptist church should be participating in the church retirement account through Guidestone. And so really, I think the employer, the church, should contribute. And we can't make you contribute, but I wish we could. And the employer should contribute a percentage. The employee should contribute a percentage. The best thing is if you make it a match, which, we'll do 5%. If you'll do 5%, we'll do X if you'll do this. And I think that's the best solution that gets employees involved in their retirement. And so this is a good time to do that. Even if your church does not contribute a percentage, it's a good time to let them decide on an amount to come out of their paycheck to go into retirement. And that's very, very important. Typical Americans are ill-prepared for retirement. And church folks and pastors are pretty much like typical Americans when it comes to finances. We really should be really good stewards, but unfortunately, some are, but a lot of ministers really aren't. And we ought to be. We've just not paid attention. And I understand some of that you're busy with life and church, but we need to be better stewards than we are. So the average American has about $150,000 saved for retirement. But a third, now that's out of those who do have an account, a third of all Americans have zero, have absolutely zero. And I'll tell you, 150,000, that's a lot of money. I appreciate that that's a lot of money, but it's not anywhere near enough for retirement. Because you're thinking about what will generate, let's take I'll hit you with a big number. What would $1 million in retirement generate per year for you? What would it generate? Many retirement people say, take out 4% of the account per year. And that's a very conservative thing in order to help you to have that retirement for all the rest of your life. And if it was 4%, that would be $40,000. Is $40,000 a lot of money? No, not today. And so so how far is 150,000 going to go? And I do see a lot of ministers retire with 150,000 in their retirement account. And between that and Social Security, yes, many ministers do make it on that, but it's hard. It's really difficult. So this is a good time for us to think about retirement and make those contributions coming out of our paycheck. Also, if you have some kind of a flexible spending account or something of that nature, this is the time to do that. For our flexible spending accounts, this is the only time to do it in preparation for the new year. And you just got that one opportunity to do it. Any of y'all's churches have a flexible spending account? Okay, some churches do. And, all right, number 3, as you follow along in the book, number 3 is Christmas bonuses. It's the right time of the year for you to know what those bonuses were. And I'm talking about, we think about Christmas bonus, but it could have been a staff appreciation type bonus that was done in October or some other month. Make sure that you've got those where they're included in on the W-2 as income, because those bonuses are income. So I get asked the question, this question comes to me every year. That Christmas bonus or that love offering or that whatever we did for our minister and for our staff, they'll say, is there any way that we can make that not taxed? And I have to say, no, I'm sorry, there's just not. If it comes from the church and it's paid to the employee, it is taxable money, period. There's no magic formula to make that not taxed. And then they'll say, well, is there anything we can do that's not taxed between the church and employees? And actually, there are some things. And actually, you've probably seen publication 15B and probably didn't ever really pay attention to this part of it, but there are some things called de minimis. And those things are so small that you don't have to report them as income. And I think it's an interesting list. So the occasional use of the church copy machine for personal purposes, occasional Cokes or donuts or coffee in the church office. You can have things such as a staff party, a meal to celebrate birthdays and anniversaries and things like that the church pays for that meal. And so sometimes church staffs want to have lunch in conjunction with staff meeting and the church pay for that. Well, that's not the way that you can do it, but you can do occasionally this. It's not for staff meeting, it's to celebrate birthdays and anniversaries and stuff. So, and those anniversaries could be wedding anniversaries, they could be staff anniversaries, how long you've been here for the church, things like that. You could occasionally do that kind of a staff meal. But just for pure staff meeting and to have a meal, no. And the IRS has had they made some statements about that. That's not acceptable for a business expense. All right, a meal to keep an employee on the job for overtime. Churches can do that, but remember, none of us pay overtime. Remember that? Flowers given to an employee, ham or turkey at holiday time, occasional entertainment or sporting event tickets. That would be something you could do on a tax-free basis. Now, I get asked the question, how much money are we talking about? Well, I'd love to have some Super Bowl tickets. Okay, how much money? I think, what are Super Bowl tickets? About $900,000 for probably the cheap seats, I imagine.
Nosebleed.
Yeah, it's probably the cheap seats, it probably is. I'd love to go to the Super Bowl, but that's not what the IRS is talking about. I think what they're really talking about is your local community theater or a movie, or something of that nature. So I think we're talking about somewhere in the range of a value of, $25, $30 or so. And in fact, I think the ham or turkey gives us an idea. How much, if you went to the what's the ham store that?
Honey Bay.
Honey Bay. If you went there and got a ham, how much would that be?
$75 an hour.
About 75. So I think that's a maximum that we're talking about. We're not talking about Super Bowl tickets. We're not talking about something of that magnitude. And you notice that it's got to be tangible. These are tangible gifts, not money gifts. So now there is one that's a reimbursement. You may reimburse the cell phone tax-free. And I think that from our bivocational churches and up, they ought to be doing that because it's not that much money, it's tax-free, and that's a good thing. So cell phone can be reimbursed.
May I ask something?
Uh-huh.
We do pastor appreciation, was it October, in that month? And now that goes, contributions are given through the church. So people get a, contribution right off of that. So that amount would go, whatever our pastor gets, that has to go on his W-2.
It has,
But now, is that correct?
that's correct.
But now at Christmas, our deacons give the staff their bonus. And it's
Yeah.
from the deacons, it doesn't go through, I don't write any kind of checks for that. Can that just, because I'm one to just give them cash and let it go. But I know you can't do that. But
Okay.
is that one okay, since it's coming from the individuals, it's not being run through the church?
Well, just make sure that the deacons who give it, it's not tax deductible. Doesn't go on their giving. And then the question is it taxable? Now, in that case, the church doesn't put it on the W-2, you don't know how much it was. But that minister should, I think, no, this is just my opinion, I think that minister, for both of them, of course, one of them's gonna be on his W-2, I think even for the deacon one, I think he should show it on his taxes. Because the only reason he got that is because he serves as their pastor. A gift is something to be out of affection. Now, so here's my thinking, and I'm not a CPA, but my thinking on it. So if I go up to my pastor and I say, hey, here's some money, you and your wife, y'all go have a nice night out on the town. That's not taxable. That's from one individual to another individual. I could give him, I think the amount is $18,000 this year, from any individual to any other individual. If you want to, you could go find somebody walking along down the street and say, hey, here's a check for $18,000, so that's not taxable. So from one individual to another individual, that's not taxable, even if he is my pastor. But to me, now here we get into a gray area. When it is organized by the church, promoted by the church, and I know it's not church-wide, but it is a church body, the deacons, then I think it's taxable money. But he's got to worry about that.
That's between him and the IRS.
That's between him and the IRS. It's not your concern. So the one that clearly went through the church, you do put that on the W-2. This one that goes through the deacons, that's up to him. Yes, sir.
So this happened, a church employee had a house fire, and a love offering was collected and then forwarded. We do have a benevolence fund separate, and it was forwarded. So should that be counted as on the income on the W forms?
It is. And I hate, that's one of the tax rules that I really don't like, but they didn't ask me. And that is that any time that you help an employee, even benevolence, you help them monetarily, that is taxable money. There's only one exception. There's only one exception to that, and that is if there is a nationally declared disaster, like a hurricane or like the tornadoes that went through here in Alabama in 2011, where there is a declared disaster. It was weird. There were some tax people, you get these weird tax people saying weird stuff out there. And one of them was saying we ought to give all of our ministers a bonus, tax-free, because COVID was a declared national disaster. Well, in reading all of the information about that, no, we shouldn't have done that. So I hope your church didn't try to do that. But that one was going around for a while. But anyway, helping a employee monetarily is taxable income. It does go on the W-2, and the only exception to that is if that was, we're helping an employee because it was a national disaster, declared disaster. Yes,
The
sir.
reason I ask is we've done benevolence towards non-employees.
Right, and that's not taxable, that's a gift.
So that's why I was wondering, would that also be a gift or a form of, well, income?
Well, as far as the IRS is concerned,
That's the important one.
it's taxable
Thank you.
when it's to an employee. If it's not an employee, it's not taxable, it's a gift.
And it could be income and
No.
Benevolence can be any amount that, that we
it's needed.
believe is needed and reasonable. Mhm. Good question. All right, so cash payments to volunteers, while we're talking about this, cash payments to volunteers should be avoided. So you have a volunteer pianist, for example, you don't pay. And so Christmas, you say, well, let's pay $500. And $500, here's the thinking of churches. With $500, we don't have to do a 1099, and so we don't have to report it, and so we're good, right? Everybody agree with that? That's wrong. That's wrong. Because when we take, say, the church pianist who's been volunteer for 11 months and 51 weeks, and now we give a bonus, what did we do? We made that person an employee. And now we've got to do a W-2. And see, W-2s they don't have that $600 limit for W-2s. In fact, the limit is about $100. So we just made that person an employee. So cash gifts to volunteers should be avoided. And if you want to give the volunteers something, give them something tangible and not of high value. Something, like we were talking about, $50, $75 of a tangible gift. 25, 50, 75, 70. I think 75 would be a max, and we could justify it by the ham and the turkey, that are on that
You couldn't
list.
do a gift card. You have to actually give them the ham.
Yeah, you're not supposed to do a gift card because a gift card is a cash equivalent. And in fact, I referred you to publication 15B a minute ago. When it talks about de minimis, then it says that cash and cash equivalents, that'd be gift cards, are never too small to be considered de minimis. So according to the IRS and what they said, you give somebody a $25 gift card, that's the same thing as cash. And now we've got to put it on their W-2 and got to take out, at least Social Security taxes. How are you going to do that with a gift card? So gift cards are not a good idea either. Yeah.
Question,
Mhm.
what if you have like teenagers that say, keep nursery during choir practice or something like that?
Okay.
And you pay them, let's just say for easy talk, $10 an hour. Is the end of the year, is that follow that $600 rule, or is there something else with that?
You got to do a W-2. Because, okay, and we weren't really going into that, but on page 7 of your book, and we do that more in the summertime, but it is an important question, defines an employee. And so when we tell them what time to be there, what time they're going to get off, what to do, when to do it, how to do it, they're an employee. And it doesn't matter how much they work. A nursery worker that works 2 hours a week gets paid minimum wage, they're an employee. They're an employee. So and you said teenagers, those are employees, and you get into the thing about child labor too. You need to make sure you're doing correctly that for child labor. For example, say your Wednesday night or something like that. If you've got 16, 17-year-olds, they can work till 10. 14, 15-year-olds can only work till 7. And so you got to know those child labor laws and apply those, and those are employees. Now, the same teenager, say a 14-year-old teenager, could be a volunteer to work with your children, not get paid a dime, they can work till 10. But if you're gonna pay them, they can only work till 7. You know, you need to be aware of those laws.
Our choir practice usually is earlier than any of our other programs start on Sunday afternoon.
Okay,
So that's why sometimes the choir director will bring in a teenager to, keep kids so for someone participating in choir. Until,
Okay.
and then the other programs, they come in and they've got regular nursery people that are there, but
yeah,
it's just sometimes if they have the early practices, he has to bring somebody in to help with the kids.
okay. Now, there are other issues that I'm not gonna get into today. I mean, you got child labor, you've got, that they're gonna get a W-2, you've got, it is taxable, you gotta think about minimum wage, you gotta think about labor laws, the Fair Labor Standards Act, you've got to, but also you gotta think about adult supervision and today I'm just talking about tax stuff. Okay?
So in that same situation, and I'm not saying we're suggesting this, but if there were, say there were 5 kids and those parents of those kids or somebody in the choir just said, look, here's $20, that kind of takes all that off the table, right? If it's somebody individual from the church rather than getting a check from the church.
Yeah, if you had an individual doing it from the church, that'd be up to them. I mean, that's not the church's deal, that's not the church's deal. However, then you're still dealing with liability and today we're only gonna talk about tax stuff. Okay?
That's really a bigger issue.
Yeah, you got a lot of things to think about. And I want to make a strong recommendation for Ministry Safe and get your church involved in Ministry Safe. Okay, good points. All right, so cash gifts to volunteers should be avoided because, like my example, the volunteer pianist, if that pianist is paid, the pianist must be an employee because they got to be there at a certain time, they get done at a certain time, they play what the church says to play, how to play it, and when to play it, and so forth. Everything there about a church pianist, if they get paid, they're an employee. They're not a contract worker. A nursery worker, I always get questions, and somebody will say, well, what if it's this circumstance or this circumstance? When you're talking about pianists, church nursery worker, things like that, it's very difficult to get that to a situation that it's not an employee. Very, very difficult. Okay, so try to avoid cash gifts to volunteers. If you want to award your volunteers, do something tangible and a reasonable amount. We don't want to give them a new car, that would be taxable. Okay, all right. Then W-2, if you've got, and I said it earlier, but I want to reiterate it, if you've got 10 total W-2s and 1099s, you must file electronically. And I would just kind of get ready for it. This number was like 200 and something, then it went down to 100, and now the numbers come down to 10. So there's coming a day which we're just going to all have to file electronically. That day's coming. But this year, Now, when I say this year, I'm talking about your 23 W-2s. And because you're filing them in 24. And so it's required for the 23 W-2s. All right, number 4, notice to donors. That please be sure, your notice should say something like this. And in whatever way of communication you have, bulletin, whether you do a newsletter with electronic communication, whatever you do, say, please wait to file your taxes until you have your donor statement in hand. Please wait to file your taxes. And also, there under number 4, I've stated that it's good to have a donor education piece. You can educate your donors about how they can give. You know, giving through stock is a wonderful way to give, and more people have stocks than you realize in your church. And maybe some of them work for a company that provides some company stock, and giving that stock is a wonderful way to give. Doing cars can be a good way to give, depending on what the church is going to do with that car. And we'll talk about that a little bit later when we talk about contributions. But there are giving through your estate, as we talked about with Baptist Foundation and that form. That's a good way for you to give to your church. So these education pieces can help people to know how to give. Another good way to give is called a qualified charitable distribution. How many of y'all have received qualified charitable distribution? Okay, it's less than a third of you. I'm surprised it's not more like half of you, because for a typical middle-class person, gets to retirement, they've got to be 70 and a half and older, they can give through a qualified charitable distribution, and that's, most of the people in America can't itemize anymore, and so your donations don't really do you any good on your taxes, except for your Alabama tax. Most of us as Alabamians, we can itemize on our Alabama tax, but for most of us it doesn't help us. But a qualified charitable distribution is a wonderful way to give, and you can educate your donors about such things. And Richard Hammer has a wonderful page that you can do. You can purchase from them and hand it out, or you can also download them online if you want to, but you pay for it. It's not very expensive. It's about $15 per 100, something like that. And it's found at churchlawandtax.com. And in your book, if you'll correct that in your book says Church Law,
Today.
Church Law Today. Yeah, that's the old name. And the new name is churchlawandtax.com. Churchlawandtax.com. They're very good, very good. All right, number 5, handle those contributions with care. And we'll talk about this a little bit more, but it must be physically received in the church's hands by 12/31 to count as 23. Or it must be postmarked sometime in 2023 for you to count it as a 2023 offering. Now, those things that are electronically done, they count when the person submitted it. So now I wouldn't want to do this because I'd be too afraid, but some of the banks, some of the credit cards are, basically 24 hours a day, 7 days a week. And so theoretically, I could be sitting at my computer or on my phone at 12:59 on 12/31 and make a contribution to the church and hit submit, and that would count as a 23 offering. Now, I would be a little worried about that, what if something went wrong with that, but theoretically that would be a 2023 offering. But otherwise, it's got to be mailed in 2023. And if they brought it to you on So our offerings, this year, January 1st was on Monday. If they submitted it in church on Sunday, the 31st, that's a 23 offering. If they brought it to you on Tuesday, when we've opened back up again, they brought it to you and said, oh, I forgot to bring this, or we were out of town and so I didn't bring this to church, and so can you count this as 23? And you've got to say, I'm sorry, the IRS won't let us count it as 23. It's got to be either submitted to the church, actually in the church's hands, or postmarked. All right, about contributions, on your statements, we'll talk about this later on this afternoon, but make sure, absolutely sure, that your statements say no goods or services were given in exchange for your contributions. That language has got to be on there. If it's not on there, the IRS in an audit could deny all of their contributions. Okay, number 6, business expenses. Make sure that you're doing business expenses correctly. If you're not doing it correctly, this change to a new year is a wonderful time to make sure that you're getting it right from now on. Then we talked about that just a moment ago. Classification of workers, and let's say that you've got a nursery worker that you've been given a 1099 to. And just a minute ago I said you can't do that. That person is an employee. And so you want to change that. Now is a good time to get that change done. Or you're paying your pianist and doing a 1099. That's incorrect. And you need to make that a W-2 employee. Also, for Department of Labor purposes, now's the time to make sure that you're doing correctly about Department of Labor. So in the church, and I'm going to tell you the most common situation, the most common thing is that your ministers are exempt employees. I'm talking about the Fair Labor Standards Act, and what I'm specifically talking about is that your ministers are exempt from overtime. And they don't have to be ordained to be exempt from overtime, but your ministers are exempt. Your ministers are exempt even if they're part-time. Say it's a part-time minister, but now they take the kids to camp for a week and they work 80 hours that week. They're still exempt. And typically, in most churches, everybody else is non-exempt. Everybody else is non-exempt. Now, the most common example of an exempt worker in the church is a non-minister who supervises others. So the most common example would be a daycare director, preschool director, people like that who supervise others. They might be an exempt worker. That means that they work overtime, you don't have to pay them any differently. Now, for the minister, they can make $15,000, they're still exempt. For that non-minister, that daycare director, that person must make $35,684 to be considered non-exempt. And that number is, I think I said that number right, but it's 35,000 something. It's, I think, 684 a week, I think is the way that was. But the Department of Labor is in discussion of changing that figure, and the new figure that they're talking about, and this could go into effect in 2024, so watch for this. That new number could be $1,000 plus a week in order to be considered exempt. So that would be more than $52,000 to be considered exempt. So that would mean that if I'm a daycare director and I supervise others, if I don't make that amount of money, I'm still a non-exempt worker. I would be subject to overtime pay. Okay, does that make sense? So step 7, now is the time to think through those things. about classification, both for IRS purposes and for Department of Labor purposes. Think through. So, I'm sorry, I should have advanced to that slide, but there's the figure, 35,568. I think it's $684 a week is what it works out. But watch for a possible increase that might happen during 2024. And so you could have a worker who might be exempt right now, but at some time during 24, they might cease to be exempt. But your ministers will still be exempt even if they change it to $1,000 a week. They'll still be exempt. Make sure your ministers are properly classified for Social Security purposes. And so there are some ministers who want to get housing allowance and they want for you to pay their Social Security taxes, half of it. It doesn't work that way. And you remember from that Guidestone piece that we looked at first thing, these ministers who are ordained and performing these services, they must pay their own self-employment tax. You can't treat them as an employee for their Social Security taxes. And then, of course, if they're not an ordained minister, they're a minister, but they're not ordained, like a youth minister or a children's minister possibly, then you might be treating them as a regular employee, taking out and matching FICA, but then that minister would also not qualify for housing allowance. So make sure you're doing that right. Number 8, the minister might want voluntary withholding. That sheet that I gave you on the minister estimating their taxes, they may want to do that, and they might want to do the voluntary withholding, and that would be if they want to, but now's a good time to get that started if you wish. Review your payments to independent contractors. You're going to have to do a 1099, and it's from now on it's 1099 NEC. NEC, that stands for non-employee compensation. Non-employee compensation. It's a good time to see about any IRS forms that you may need, and then there's some steps before 2023 closeout. I'm going to, let's see, and I'll let you read that part. Do check your wage reports, and here's something that's very important. When you print out, and you could print these out on plain paper to kind of make sure that you got it right. And so when you look at a W-2, and for your regular employees, the amounts on the W-2 in box 2 for federal withholding should equal what goes on your W-3, your summary of all your W-2s. And then your amounts for Social Security taxes should agree with the W-3 when you add them all up. And then what goes on your 941s for what goes on Social Security taxes, the FICA, should be double, on the 941s should be double what the total is on your W-2s. And so that's the way that you can kind of check things and make sure that things are correct. All right, it's time. I think they're looking at me, and I think it's time for us to go to lunch. There is one more thing as we finish up this. Now, if you're still eating, go right ahead. Don't worry about me. Of course, I've never known me to stop anybody from eating. So, but take your time. Take your time, certainly. You've got a section here on page 109. 108 and 109 about some deadlines and things. I do want to call your attention to number 13 on this booklet, number 13. If you have disability insurance through like Guidestone, for example, then you need to update your payroll numbers with Guidestone. If you have life insurance, that is, say, 2 times annual income, through your church that you're paying for, you need to update those numbers with Guidestone so that your insurance is updated to reflect the new amount. That is really, really important. had a friend of mine, this years ago, but had a friend of mine who became disabled. And it's really wonderful that his church had provided for him disability insurance, but they had not updated those numbers in 10 years. So he got disability insurance based on his salary 10 years ago. So that was really unfortunate. So anyway, you can see these deadlines and then more deadlines. And on page 109, about your contribution statements, your statement should be kept for 7 years, your copy of the statement. Your envelopes, if you use envelopes for your giving, you don't have to keep those at all. We usually suggest that you keep them 2 or 3 years. They make a good backup for you, a backup system to check and see what happened if there is a question about somebody's giving. But, so you can keep them a couple of years, but you don't have to keep those at all. But the statement you do need to keep. Now, let's go to your book. And while we're there at the end of the book, very, very last page, you've got some resources. And you do have my contact information. You've got my email address. You've got my phone and my cell phone and every way to contact me. So as I told you, I'm semi-retired, working part-time, and so try to make it easy for you to get a hold of me. And some other kinds of resources. All right, so in your book, in your black book, we're going to start through page 7, and we're going to cover about the first 20-something pages here quickly to look at paying people. We've covered some of these things this morning, but we're going to cover this. And you'll see in your book where it is. And so use this book as a reference book and something that you can refer to later as you have questions. And Lori gave you a marker, and I should have said this earlier this morning, but the highlighter is one that you can highlight stuff in this book that you see is important and things that you want to have for future reference. And these are really nice highlighters. Are they the good kind? Yeah. Okay, I thought they were. But they're the good kind. They're kind of a waxy thing, and they don't bleed through pages. So you could even highlight in your Bible if you want to, and it won't bleed through. So these are really nice. But use that for anything you want to mark up in your book and things that you see are as important. Another thing that I want to do, just so we kind of know who all we are, and let's look at it. I want you to think in your mind, what size church are we? What size church are we? You got that thought in your mind? Okay, let me tell you what is reality. Okay, among Southern Baptist churches in Alabama, and what I'm going to tell you is, I've seen the exact figures. I'm just going to tell you a approximation, but it's easy to remember, and it's something that sort of has a big picture for us of what our situation is in Alabama. 1/3 of all churches in Alabama have 50 or less, well, really 49 or less in attendance. 49 or less, that's a third. 1/3 of churches have 50 to 99 in attendance. That's a third of the churches. And a third of the churches have 100 and more in attendance. So what do you think about your church now? It's bigger than you thought, isn't it? And so let's ask, how many of you you serve a church that is 0 to 49? Okay, that's several of you. How many of you serve a church that, I'm talking about average attendance, typical attendance is 50 to 99? Okay, that's a bunch of you. And how many of you serve a church that's 100 and up? Okay, so that's a bunch of you. And some of you in this room, I know, serve churches that are much larger than that, but it just kind of tells you what we are typically in Alabama as church sites. And churches need to be aware of the things that we're talking about today. And there's very, very, very few things that don't apply to the small church. Almost all the things that we talk about do apply to the small church. One of the few things that doesn't apply perhaps is talking about health insurance and providing health insurance. We will mention that today and see if there's some questions about that. But most of the other things do apply to the small church as much as they apply to the large church. All right, so page 7 in your book, we're going to go through what if we are going to pay somebody? What are the things that we need to consider? What do we need to do if we're going to pay somebody? And so the very first thing on page 7, we need to determine, is this person an employee or is this person a contract worker? And that's the very first thing. We talked about that earlier this morning. And so if you have a lot of control over that person, you tell them what time to be here, what time they'll get off, what to do, how to do it, when to do it, and so forth, then they're an employee. If it's a situation like, you say cleaning the church, for example. Okay, we could have an employee. You're gonna come in Monday morning and clean these areas, and you're gonna set up these tables and do this, and you'll get off at 4. We could have an employee. In terms of cleaning the church, we also could have a contract situation. We could say, hey, we don't care what you do, when you do it, how you do it, what time you come in, we're gonna give you a key, you can show up at midnight if you want to. We just want it clean by Sunday. Then that's a contract worker. And sometimes we try to make somebody a contract worker when they're really not. Why do you think that we do that? We won't have to fool with the taxes and the Social Security and the FICA and all that, and giving somebody a 1099 is simpler and it's an easier process, and so we'd rather give them a 1099. Well, we can't do that. We've got to do it according to, is this person an employee or is this person a contract worker? And we need to know, and on page 7, you've got the test for how that works. On page 8, once we determine that this is an employee, and now we're going to go down the road of this is an employee, then we've got to get 4 forms plus E-Verify, which is all done online. So those 4 forms are the W-4 and A-4. We didn't talk about A-4 this morning, but A-4 is withholding for Alabama. And it's a very simple form. They figure out how much they need to have withheld and indicate that on that form, and you withhold Alabama tax if it calls for it. The I-9 is the immigration form that tells you if they are legally able to work in the U.S., and that is required. Now, in Alabama, E-Verify is required. E-Verify is a federal program, and E-Verify is voluntary concerning federal law, but it is required concerning Alabama law. So you've got to do E-Verify, and that does essentially the same thing that the I-9 does, but it's electronic. And then finally, the NH1, which is the new hire form for Alabama. Now, if you've never done these forms before, do the first 3. Do not do the last 2 on current employees. Only do those last 2 if you've got any new employees that come to you. All right, and most common mistakes, we as churches often just fail to do these forms much, maybe not at all. And also, we fail to do them on a minister thinking the minister is self-employed. So we talked about W-4. Second thing, page 23, I've got in my notes, but I think I moved that. Let me look in the book. Oh, it's still back here.
AJ,
Page 8, and then, okay. All right, yeah, bottom page 8. I need to correct that on here. I moved it around because I was moving it to make it a logical sequence of what to do as you think about paying somebody. So we've determined they're an employee, we've gotten these forms done. The next step is we got to determine, is this person exempt or non-exempt? And that should say page 8, not page 23. Is the person exempt or non-exempt? And we talked about that earlier this morning. Does anybody have a situation that you've got an employee that you're not really sure if they're exempt or non-exempt? Anybody? We can kind of talk through it and see if we can help you. Okay? All right, well, after we get through, I'll be hanging around for a little while, and if you've got specific questions about a specific situation that you've got. So the most common thing in the church is that your ministers are exempt, pretty much everybody else is non-exempt, and the most common exception to what I just said is you might have somebody that supervises others, such as I gave the example of a daycare director. And they must supervise at least 2 full-time positions or the equivalent of, like they might supervise 4 half-time people or something of that nature. But otherwise, people are non-exempt in the church, and that means they must be paid for all hours worked, and they must be paid overtime rate for any hours over 40. And we need to be very, very aware of that. Of course, you've got to make the $684 a week to be exempt. That's $35,600 and something dollars. $35,568 per year to be exempt, and that figure might change this year in 2024. And so the ministers are an exception. Now, the next thing we want to look at is it taxable? Let's look at page, I think I had it on page 16, but it's 21, page 21. Page 21 is the question, is it taxable? And the first thing that I deal with is, what about your health insurance? Is that taxable or not? And if you provide a group health care plan, that is a non-taxable benefit. That might be, say, Blue Cross Blue Shield group plan. If you provide Guidestone, that is a group plan. And that medical insurance is tax-free as a benefit. And if you provide other things, it might not be tax-free. So if you pay for their Blue Cross Individual Blue, or whatever they're calling that now, if you pay for their individual policy, that might be taxable. And so in 2015, it all became taxable except for the group healthcare plan, and except for also they made an exception if there's only one employee. They were saying, you can't buy group health insurance for one employee, so we'll let you pay for the health insurance for one employee and consider that like a group. Then in 2018 and 2020, we had some changes that came along, and they helped us out in this area because a lot of people had a taxable situation now. And one of those situations is called the Qualified Small Employer HRA, Health Reimbursement. Qualified Small Employer HRA. And so if you look at your chart here on page 21, the 1, 2, 3, 4th thing down, it mentions there's an exception called the Qualified Small Employer HRA. And there's some rules that go with that, and those basic rules are outlined on page Actually, it's not page 71, it's page 68. And I have corrected that in the new book. Or there's another one, see down the bottom of the chart, there's that qualified small employer HRA, but there's also the ICHRA, which is individual coverage HRA. And so these are documents that you may be able to put in place which might make your payment tax-free that you pay towards an employee. And I want to mention these because this sounds like if you don't have a group plan, sounds like, oh my goodness, that would be way too hard to do. We couldn't do it. It'd be too expensive to do. And those two solutions, or potential solutions, are not that expensive. You purchase the document from a qualified person, you put the policy in place, you do it as it tells, following the rules that it tells, and you're good to go. So these are a good solution for many of our churches. In the past, a long time ago, you could do almost anything and call it a health benefit. You were reimbursing stuff, or you're paying $1,000 a month. Well, you wouldn't be back then. Maybe back then, way back then, you're paying $1,000 a year towards their health insurance, or something of that nature. And then all of a sudden, all those payments became taxable. And these are some ways that you can make that potentially not taxable. You've got to have an expert do it, but once you pay for the document, and if your church meets the criteria for doing that, then you're good to go, okay? So anybody have a situation about your health insurance that you're not sure about, you're not sure if it's taxable, you're not sure whether it might be or might not be? Anybody? Okay. Y'all are quiet today. All right. So before we go on to what is taxable, I want to look at the bivocational pastor. And this morning we said that it's possible for a bivocational pastor to have 100% of their income as a housing allowance. And that's the question I get from bivocational pastors. Can mine all be housing? And yes, if that fits your situation. Now, is there a limit to housing? There's not a specific dollar amount, and there's not a specific percentage limit to it. Some people have the idea that you can't do more than 50% of your income as housing allowance, and that I still hear that from churches. But that's not true. That's not true. It can be even 100% if that fits the situation. Now, the third bullet here is a question I ask, and I'll say, but should you? And my reasoning is not a fear reasoning, afraid I'm going to cause a red flag to the IRS or anything like that. It's not that. It's that if you will have some of your income as taxable, then you can contribute to the church retirement plan, which is something that every person employed by the church should be doing. If it's 100% housing, do I need a W-2? And then that answer's no. You could get it on church letterhead. And on church letterhead, it would say that you received $20,000 in 2023, 100% of which was housing allowance. And so then this also comes to the question about reporting. So these are the questions I get from the bivocational pastor. Then here are the questions that I received from that bivocational church. Well, what reporting do we have to do? And so if the pastor is the only one employed, only one paid, and only gets housing, then you don't have to do any IRS forms. You just do that statement on church letterhead. If the pastor is the only employee and he receives money in addition to housing, now you've got to do a W-2 and a W-3, which summarizes all your W-2s. You only got one, so it's not hard to summarize. And then your A-3, which is the Alabama form, which summarizes your W-2s for Alabama purposes. So that's gonna be real easy for that church to do. Now, the next thing, if there are any, number 3, if there's any other employees other than the pastor, and they're not a minister, then we're gonna have to do 941 and W-2s, W-3s, A-3s, et cetera. And that's what we'll have to be doing. Now, this ministry assistant example I've got, part-time, makes $12,000 a year, and the church puts $1,000 in for her retirement. In addition, she puts $1,000 in for her retirement. Church provides some group term life insurance, but it's not $50,000, and so there's no tax indicated by it. And so her W-2 looks just like anybody else's. Anybody in any industry. Now, I don't have this one in your book, but so for her, she made $12,000. She put $1,000 of her own money into retirement, and so that makes her line 1 taxable for federal income tax purposes, $11,000 rather than $12,000. And then you'll see that boxes 3 and 5, her wages subject to Social Security tax are still the $12,000. Putting money into her retirement didn't help her on her Social Security taxes, her FICA. And you'll see boxes 2, 4, and 6 correspond. Box 2 just made up a number basically, because we don't know, if this is her only income, she doesn't owe any tax. If she's got another job, if she's married and they've got other employment, things like that, then there may be taxes owed. So it all depends on the situation. But her money that went into her retirement that came out of her paycheck goes in box 12 with code letter E. Code letter E is the code letter for a 403B, which is what Guidestone retirement is. So if you've got Guidestone retirement, that's the code letter you'll be using. And then her state wages are the same as her federal wages. And 99.9% of the time, that's what's going to happen. State wages are going to be the same as federal wages. Now, if you end up paying some overtime in 2024, that might not be the case. That might not be the case for the 2024 W-2, which that's not what we're doing right now. We're doing the 23 W-2. But for 24, state wages could potentially be different than federal wages if there was overtime involved. Okay, so we've gone over hers, and hers looks like any other industry anywhere. The pastor, this is a pastor who has a salary of $25,000. Out of that $25,000, he asked for $15,000 as housing allowance. So that makes $10,000 that is taxable wages. And then out of the 10, he asked for $2,000 of that to go into retirement. And in this case, the church is paying $1,000 towards his retirement and some life insurance. And so what we do on this one is he started out with 25. He asked for 15 as housing allowance, so that makes it 10. He asked to put 2,000 into retirement, so that makes it 8. So you'll see that $8,000 is there in box 1. Now, he did have life insurance that was a little bit over $50,000, and so there is a taxable amount of $12, and you see that in box 1, reflected in box 1. You also see it down here in box 12. So his $1,000 that he put into retirement goes there, $2,000 goes there in box 12 with code letter E, and his life insurance goes in box 12 with code letter C. And the IRS has a table to help you figure out how much that taxable amount is. If you've got software like ACS or Realm or one of these, then it's probably going to look that information up for you and do the calculation. Just for the fun of it, I put code letter DD, health insurance, and put that in there, but nobody has to do that unless you've got 250 employees. And there's not a single church in Alabama that I know of. Well, I wonder about Church of the Highlands. They might have 250 employees. They probably do because of all the campuses. But I don't know of any Baptist churches or other denomination churches that have 250 employees. So we don't have to do it. And I suspect that all of us are not going to do it because we don't have to. And so notice that it's very, very important that boxes 3, 4, 5, and 6 on an ordained minister, 3, 4, 5, and 6 are always blank. They're always blank. If you put an amount in box 3 or 5, the IRS is going to send you a bill. So don't do that on an ordained ministry. All right? And then health insurance is optional. Also optional is the housing allowance. And I covered it up with my box, but box 14, if you want to put housing allowance, you may, that's the word the IRS uses, you may put it in box 14 labeled housing allowance. So we could put in box 14, which is covered up right there, we could put housing allowance, $15,000 in this example. Yes, sir?
In the past, I've done that, but instead of blank, I actually put 0.0. Is that appropriate, or should it literally be blank?
Oh, now, what I've read is blank.
Okay.
I don't think they have messed it up if it was 0. I don't think, does anybody know the answer to that? Have you ever put zeros and had a problem?
Your example just says boxes 3 through 8 are left blank, do not enter zeros.
Oh, okay, yeah, you're right. That is in the book. So I guess it could mess you up, but, maybe if you haven't had a problem, maybe the IRS person who saw that knew that was the way it was supposed to be for ministers. Yeah. Okay? Any question about what a minister's W-2 looks like? This is very, very important. This is what in a basic way, this is what your W-2 should look like. If your W-2s don't look like this, you need to be asking, why don't they look like that? Okay? Any question? All right. Now, on page, and again, I moved that one section, so I think our page number is different. On page 26, there is the minister's sample W-2 on page 26. And then also there's a 941 sample. And I didn't do the whole 941, I just did the part that is different for churches. And so the 941, in the example that we just talked about, how many employees do we have? Got 2. Pastor does count as an employee. Okay, next question, how much do we have in wages for this quarter that's taxable wages? And so let's calculate that. First of all, the pastor makes $8,000 a year taxable wages. So that's $2,000 a quarter. Now the $12, you can do that at the end of the year. You could, that last quarter, you can do those things if you wish to, in case there's any changes or anything. But basically he makes $8,000, which is $2,000 a quarter. She makes $12,000, which is $3,000 a quarter, but her amount that she put into her retirement account helps save tax money on federal tax. And so $1,000 divided by 4 is $250. We subtract $250 from her $3,000 and we get $2,750. So $2,000 plus $2,750 is $4,750. See how I got to that? Does that make sense? And then her federal withholding, he didn't do any. If he did federal withholding, you would list that there in that third box. Then when we get down here to 5, this is very, very, very important. We take her wages, not both of their wages, just her wages, and put them in. So just your non-minister employees, their wages would be down here in box 5. And so we put the 3,000 there in box 5, and then we calculated it. And here in column 2, what we're doing is both halves of Social Security, both halves of FICA. And so if you add it up, the first one is 12.4%, the last one is 2.9%, and you add those together and you get 15.3%. And that's what we pay in Social Security taxes. It's just a little bit hidden for those who are employees because they're only paying half of it. And for those people who are self-employed, like ministers who are self-employed for Social Security purposes, they see the full 15.3% calculation. So this is, give you an idea about 941. The minister is an employee, does count. His taxable wages do count, but then they don't count down here in box 5. All right? So let's move on down. Additional steps you may need to do. You do need to do the 941, W3, and A3. The 941 is your quarterly report. A3 is Alabama. W3 is your federal summary. And then if you might be required to do Alabama monthly. If you've got more employees and higher wages, you might have to do that monthly. Some of you will only have to do Alabama quarterly. How many of you, anybody in here have to do Alabama monthly? Do y'all? Yeah. So that's going to be whether your wages are enough to do that. Okay. Then we get to, okay, so now we're dealt with employees. We figured out, are they an employee? Are they an exempt employee or a non-exempt employee? What are their wages subject to tax? And we've figured out a W-2, we figured out a 941, we figured out those things related to tax. Now we look at the contract workers. And so anybody that you pay $600 or more to, and I didn't put this in here because on the 1099 NEC, that's the new form, came out a couple of years ago. You've only got, well, of course, your name and name of them of the business, the church, and the name of the person, and you've only got one box to fill out for most of you, and that is box 1. How much did they make? So this is a contract worker. This is a non-employee, but you paid them. And if you paid them $600 or more, and they're not incorporated, then you've got to fill out a 1099. And you may have, think through, what have we done this year? You could have several 1099s. You could have done some air conditioner work with a mom and pop operation. You could have had a plumber or a painter or a carpenter come and do some work. You could have had a revival. You had an evangelist that you paid $600 or more to. So think through, who have we paid $600 or more? If so, are they incorporated? If they're incorporated, then we would not give them a 1099. But how do I find out if they're incorporated or not? There's a form, W-9, yeah.
Okay, you said that
W-9.
you might have a minister, but wouldn't he be an employee? If you told him to be there at a revival at a certain time?
For the evangelist, he's not an employee.
Okay.
Yeah, even though you're telling him a certain time, you're giving him tremendous leeway. you don't tell him what to preach. You kind of know because of his reputation. You know he's going to be a pretty good preacher, and you know he's going to preach the gospel. But other than that, you don't know exactly what he's going to preach. So I had a tax attorney, another tax attorney that I trust so much. And here's the question about, say, an interim, because it also answers the question about the revival. For an interim, do we give them a W-2 or a 1099? And most of us as churches have been giving them 1099s for an interim pastor. And he gave the explanation that I think is a good one. He said, if they don't do anything but preach, that's all they do. They just come in and preach. You could give them a 1099. Because, yeah, you are telling them what time to be there for the service, but tremendous leeway and everything else. But he said, if they do anything else, if they have office hours, if they meet with deacons, meet with committees, if they visit, if they do hospital visits, if they do any other duties but preach, he said you should make them an employee, even for that interim. So that kind of gives us an idea about the evangelist. He's not there to have office hours or meet with committees or stuff like that. He's there to preach and perhaps talk to people who make decisions, things like that. But he's not an employee. So I think that one.
We currently have an
Yes.
interim pastor, but before we called him as interim, he would just come randomly as a supply speaker.
Okay.
So in his W-2, I include his supply speaker pay also, because I don't need to issue him a 1099 and a W-2.
Well, I think you should, in this case, I think you should add it to the W-2. Here's why I'm saying that. It really doesn't matter, because he doesn't, okay, let's say that you have an interim financial secretary, and now I do know of a couple of financial secretaries that could get a 1099, because they do, say, 3 or 4 churches, they work from home, they do it on their own time, they do it on their own computer, they just deliver the checks to the church and the financial reports to the church, and that's it. They don't have office hours, they're not required to be there at a certain time, things like that. So let's say that you have that situation for your financial secretary, and it's a 1099. Then we say, hey, we like what's going on, we're gonna hire this person. So about May, you hire them. Well, now we're kind of in a pickle. Do we give them a 1099 and a W-2? And I think the answer to that is yes. Because if I only did a W-2, I messed up over my FICA taxes. And I could give the 1099 for the first part of the work and the W-2 for the last half of the year, 7 months, I think. And what you could do, you could write on the W-2, hire date May 1st. And that would explain why you didn't do FICA taxes before that. But on a minister, you don't have to do FICA taxes anyway. So I don't think it really makes any difference.
Because he's the only employee that we have.
And you don't need to do a 1099 and a W-2 because you didn't have to deal with FICA taxes anyway. So I think in that case, I think I would put it all on a W-2. And you might want to check with a CPA about that, but that's my suggestion.
I am one of those, I just didn't know.
Okay.
Wouldn't that,
And Joellen Johnson here at the State Board of Missions, she is really wonderful. She's our CPA here, and she answers a lot of CPA questions for churches, even though that's not her real responsibility, but she's very, very helpful to churches. There's a
I was just
question.
gonna say, wouldn't that, if he wanted to take mileage, so when he was a supply pastor, couldn't he take mileage expense? So if you
Yeah.
gave him a W-2, he could take that.
Yeah, from when he was not an employee, he could count mileage even from home.
And like the financial secretary you were talking about, she could take
Yeah.
expenses for her work from home.
Yeah, and
So
then
you wouldn't
when,
wanna give her
right,
a W-2 for that.
yeah. And do you know that now, the IRS changed this last year or the year before? A person working from home and they're a W-2 employee, can they count home office? No, not at all. If they get a W-2, they can't do home office. So, wow, that's been a big change. Okay, so always obtain a W-9 before you pay somebody, because after you pay them, it's gonna be hard to track that W-9 down. And so you'll want to do that. What's really weird is that on the W-9, if you didn't do the W-9, and then you're gonna give them a 1099, you try to track down their social security number and you can't get it. Well, what's really weird is you're supposed to still give them a 1099. And then you're gonna get penalized for leaving the social security number off. And by leaving the social security number off, you're supposed to do backup withholding of 28%. You didn't do the backup withholding of 28%, so where's that money coming from? Coming out of the church. All right. Now, some of you may be familiar with accounting, and nonprofits have to do what's called a Form 990 to the IRS. Churches do not have to do that Form 990. But a church might have to do a Form 990T. 990T is if you had unrelated business income as a church. And this could be that you operate a coffee shop in your church that's open to the public, or you operate a bookstore that's open to the public, something, perhaps if you have a cell tower on your property. There's certain ways that you could have unrelated business income, and you might have to pay tax on that. We're not going to go into all the details about that today. If you got questions about that one, just see me afterwards. Things that are regularly carried on. Okay, if you do have to do a 990T, then its due date is May the 15th if your books are on a calendar basis. Okay, and if you operate a school or daycare, then you also need to fill out a Form 5578, which is your statement of non-discrimination, that you don't discriminate on the basis of race concerning your students. Okay. Now let's look at page 22, page 22. Page 22, the question is it taxable? So you see on page 22, I've got a chart for you that kind of helps give you a reference. So wages are taxable, bonus is taxable, Christmas love offering is taxable. Any money going from church to employee is taxable, unless there's an IRS rule that says that it's not. And so is it taxable? Another thing that you see here, such things as club dues, that is taxable, but professional organization dues are not. So, for example, if you got me a membership to a gym, a country club, a fitness club, a social club, something like that, and you gave that to me as an employee, that would be taxable. Professional organization, I'm a part of a couple of professional organizations that I have to pay dues on. One of them is National Association of Parliamentarians. And so if if the church paid for those dues, that's a professional organization, and that could be reimbursed to me. So that's what that one means. Housing allowance, you see the bottom of that section is not taxable, but it is taxable for self-employment tax. The reimbursements, we've talked about those today. If you do your reimbursements correctly, they're not taxable. If you do them incorrectly, they're actually supposed to be added to the W-2 if you don't do it according to the way that we stated this morning. You can have some other things happening that I just list these because they're possibilities. You can have a tuition reimbursement plan for all your employees, and that can be done on a tax-free basis. If you reimburse one employee for tuition and not the others, that's likely to be taxable unless they're working on like a seminary master's or doctorate, and it relates to their job, then that might not be taxable. And then, of course, we talked about benefits such as medical and group term life insurance and disability insurance and contributions to retirement, things of that nature. As we look at this chart, do you see anything that you have a question about, or do you see anything that you're doing that you're not sure if it's taxable or not? Everybody okay? All right. So I want us to move on to contributions. And I tell you what, let's take about a 5-minute break. All right, I had to get some caffeine here. And so I hope y'all do too. This last part of today, if there's anything you need to do, if you need to stand up, if you need to move around, you feel free to do anything that you need to do to stay awake, and I'll try to stay awake, and we'll get this done. I do want to clarify one thing that I said. You cannot do FICA on an ordained minister. Okay, we saw that in the booklet. We saw it in some things that we said. Now, here's what you can do. You can do, we call it a Social Security offset. That means that you're saying to that pastor, you're saying, hey, pastor, you really are an employee of our church. We can't pay your half of FICA as we do on these other employees. You don't have FICA, you've got self-employment tax, which is your Social Security taxes. So we're going to pay that amount to you. And you can't pay their FICA for them, but you can do that. You give them the money, and then it helps them to pay their taxes. However, that money that you give them, that's just additional taxable income. Goes on the W-2 in box 1. So does that make sense?
Is there a calculation, or you just give them a?
Many churches, that's a good question. Is there a calculation? Many churches will do 7.65% because that's the amount that they have to do to other employees, but you can do any amount you want to. And I have heard of a few churches, this is very rare, heard of a couple of churches doing more than 7.65 because this money in itself is also taxable. So we're going to give you a little bit more to help you pay the taxes on that. So I've heard of as much as 9%, but there's probably 1 in a million churches doing that. It's the most common answer is the 7.65%.
We pay the 7.65%, but it's on salary and housing.
Yes, and that is the way it should be. It should be on salary and housing, because that minister is going to have to pay their Social Security taxes on both salary and housing. That's good. Yeah. It should not be on salary alone. I mean, you could do that, but it'd be so much better to do it on salary and housing. All right, because that's what he's going to have to pay taxes on. All right, let's look at charitable contributions. I think this is on page 46. And like I said, I've got some good news for you in the realm of designated giving. So the 6 basic IRS rules, and if you go to IRS publication 526 on charitable contributions, they don't say it this way. But if you'll look through and read through, you'll find all 6 of these. The way they divide it into contributions which are tax deductible, contributions which are not tax deductible. And that's the way they approach their booklet. But these 6 came from Hammer's book, Hammer's big book, and I think it makes sense. I think it's a good organization. So it is a gift of cash or property. Cash means cash, checks, bank transactions, credit card transactions, if you so forth. Property is anything non-cash, anything else. It is deducted in the year given, so we have to look at that question about, well, when did they give it? Did they bring it to us by December 31st, or it was postmarked by December 31st? Number 3, the amount is unconditional and without personal benefit to the donor. Number 4, it is to and for the use of the church, to and for the use of the church. Number 5, it is within allowable legal limits, and that's not really our concern as the church, that's the donor's responsibility. And then number 6, it is properly substantiated. And now that number 6 is where we're concerned a lot right now. So the additional IRS requirement besides those 6, it's really contained within the 6, but I listed additionally because it's so important, is it cannot earmark a specific individual. And if you'll look on page 47, the right-hand side of the page, you'll see giving which is not tax deductible. Very first one on that list is a contribution which is to a specific individual or family. That is not tax deductible. We get that question a lot. So it is a cash gift. That's cash, checks, bank transactions, and so forth. Any of you have any odd now, credit card giving is, and online giving, things like that, ACH, those are becoming pretty common these days. Anybody have any unusual ones? Anybody give by text? That's acceptable. We may be doing that before long. Okay, yes, sir.
Mine's a question on.
Go ahead.
Okay, it says contributions not deductible. Sometimes we'll have visiting singers.
Okay.
And a love offering is proffered. And some people write a check saying $50, here you go.
To so-and-so.
To the visiting singers.
Okay. We're going to talk about how you do that. There is a way to do it that it is tax deductible. And we're going to talk about how you do that. In fact, in just a minute, we're headed that way. So let me finish up on this one, then we'll go into that point. So property gifts would be anything else. Merchandise from the store. It could be a used computer, a used car, could be a gift of stock, could be real estate. Maybe they gave you real estate. And those would be property gifts. Now, a lot of times they'll bring you a receipt. Hey, I just brought this stuff at Walmart. Here's the stuff. Here's my receipt. Would you put that on my giving record? And really, no. We're going to fix it for you, but it's not going to be the way you're thinking. And so you've got to, many of you, for your software, you have a method for a non-cash gift. You've got a method to list property, merchandise, and say, thank you for your gift of this on this date. And it will say no goods or services were given in exchange for your contribution. But you don't put the amount on that. See, when they bought that stuff at Walmart, they didn't bring you cash. They brought you merchandise, they brought you property. And so we've got to divide the way those two things are done, because when they have to do their taxes, they've got to divide their charitable giving into gifts of cash and gifts of property. So we as an organization, we've got to divide it that way, in the way that they give it. So even that one that they're holding the receipt in their hand, you don't put that on the statement as a cash gift. You put it as a gift of merchandise.
And isn't it, if it benefits them at church, it's not acceptable?
Well,
Like if they buy for their own, something for their own class or something like that?
yeah, and I'll tell you, Jim emphasized that a lot. Here's the way that I say it, okay? If you're in control of a ministry and you control the way the money is used. See, one of those 6 things was unconditional. Remember that one? Unconditional, without benefit to the donor. So it's got to be unconditional. So if you control the gift, you control the way it works, then technically that's not a charitable contribution. It's not a tax-deductible contribution. And here's an example that I like to think about. There was one time in my church, and I served on staff at a church and then volunteer at a church. And so the last 20, I've been here 24, 23, no, I was there 23, I've been here 21 years. And so during this time, I've been a volunteer at my church. I've not been on staff, for that amount of time. And so there was one time that we had these little bitty marker boards that were about that big. And I thought, this just won't do it. It won't work. And I had a big class, and I was teaching Sunday school. And so I asked our discipleship minister, can I have a big marker board? And they got it for me. But let's take it and work that example a little bit differently. Let's say that I'm teaching a Sunday school class, I've got a little bitty marker board, I want a big marker board, and so I go out and buy it myself. It's for me, it's for my class, it's my stuff, that's the way I feel about it. And I want a big marker board. Now, have I given that marker board unconditionally to the church? Unconditionally? Well, probably not. And here's the way to tell. So the new discipleship minister comes to me. He says, I noticed that you I've got it standing there in the classroom. It hadn't been put up yet. And I just bought it, and I'm excited about it. And so he comes up to me and he says, I noticed you just bought this marker board. You know what? We've been dying for new marker boards in the youth department. And they don't even have the little one that you got. And so I'm going to take your marker board and I'm going to take it down to the youth department and I'm going to use it there. And I just really appreciate you buying this for the church, because that was such a nice thing to do. We really need it. Okay, now, my response is whether I gave it unconditionally or not. If I say, hey, that's great, I'm so glad to have provided this for the youth ministry, then I've given it unconditionally. But if I say, you're not going to take my marker board, I haven't given it unconditionally. And that's kind of the way that I think about that illustration. If it's a ministry you control, a ministry that you, then there is a question about, is that a tax-deductible gift? And the question really is, did you give it unconditionally or not? There was a church, well, this happens pretty often. Older class gets, we've got folding chairs in the rooms. Older class buys their own padded chairs, okay? Did they give that unconditionally to the church? Probably not.
Don't get my check.
And before all the pews were padded, and in some of the older churches that I used to be, part of before I was at the church that I was last at, senior adult, you go through the sanctuary and you'd see little cushions. And that was somebody's cushion and that was somebody's seat. And you better not get in that seat. Anyway.
We recently had an experience that kind of works on that view. We had a church-wide breakfast. A guy was in charge of going ahead and buying all the food. And when he brought me his receipt, he said, "Can you just put out that on my contributions?" And I said, "Well, no, but I can reimburse you, and then you can give the money back to the church."
Yeah, you can do that.
And so ask for a PO, so that if they're aligned for what you're doing.
Now, there's actually another option. There is a kind of giving called quid pro quo. It's talked about in your book on the following pages. It's called quid pro quo. That means, it's Latin, it means this for that. And so you didn't know you were going to learn some Latin today. This for that somebody did get something in exchange. So the rules for that are a little odd, and not very many churches do it, but this would come into play. Let's say that he gave the money for this breakfast or dinner, and instead of buying the merchandise, let's say he gave money for it, and let's say that his family has 10 people in it. Let's say that your church, the event's gonna be 30 people, and he's got a family of 10, there are gonna be 10 of that 30. And he gave the money towards this dinner. You could give him a receipt that says, "Thank you for your donation of $300. In exchange for your donation, you received 10 dinners with an approximate value of X," whatever those would be valued at. And then the difference would be what his contribution is. See, at our regular giving statements, it's always got to say, no goods or services were given in exchange for your contribution. Now, let's take it another way, that quid pro quo works another way that's a little bit weird. If the value of what they got in exchange was very low value, you can ignore it. So let's say that he paid for 30 people to come to this dinner, and 10 of them are his own family. Well, you can't ignore that. That's a significant value. But what if he paid for a dinner of 100 people and it's just him coming? Well, that's of negligible value that he got in exchange, and the quid pro quo rules say that you could count the full amount as a tax deductible contribution. But I'll challenge y'all to read that section. We don't do it very often. We do it a lot with dinners, or fundraising dinners, or bake sales, things like that. That's where the quid pro quo thing comes into play with churches.
So if it's a low amount, what they give, pretty much you have a bucket and you say, you're getting a spaghetti meal, but make a donation.
Yeah, and those just ignore, because they're gonna kick in $10 or $20, and it's really not,
$3 or $4.
it's really not a donation.
Okay.
Yes?
What special considerations are that we're expected to receive a donation of about 20 acres and a house and some other buildings on the property? I don't really know what the value of it is, quite a bit, I would think, but other than us acknowledging the gift, is there anything on us that we need to do?
Well, you will need a real estate attorney to help you with the closing. And when you do that, I would get that real estate attorney to help you make sure you got your documentation right. Let's go ahead and do it. If you receive something, let's go over to page 50, not 2, I think. No. Okay, page 55. Page 55. If you receive something, if it's worth $5, this is just a checklist of things that have to do about a contribution, like contribution of property. If you'll look at these, I've tried to be emphatic about it, but I'll start with donor needs to do this, donor needs to do this, donor needs to do this, church needs to do this. So there's really not much that the church has to do. But a gift like you're talking about, then if it's $500 or more, there's a form for that, an 8282. If it's $5,000 or more, it's got to be appraised, and that's a 8283. And 8283 is the form if it's $500 or more. 8283 is also the form if it's $5,000 or more. But the donor has to get it appraised. And that appraiser has to sign off on what their appraisal is. And they're attesting to the value. And if it's worth more than $5,000, you've got to sign that form, and you're not attesting to the value, you're just saying, yes, we did receive that as a church. And you're also saying, no goods or services were given in exchange for your gift. But I would get the closing attorney to also help you with this documentation to make sure that you've done it right. Because, let's say that's worth, $250,000 and you did something wrong on the documentation of it, that the IRS could deny the gift as a charitable deductible gift.
I think our pastor's been working with a lawyer at the Alabama Baptist Foundation.
Good. That's really good. So we've got gifts of cash or property, and then number 3 on that, we're back on page 46. Number 3, time and labor are not under property and gifts of cash or property. Number 3, under that number 1, number 3 is that gifts of time or labor are not tax deductible. Number 3 and 4 in our list of 6, number 3 and 4 indicate that the gift is unconditional and controlled by the church. To and for the use of the church would indicate church control. So let's go back to our question about love offerings. Let's do a love offering. Let's do the special musician that comes in. Y'all take up a love offering. And if you just take up the love offering, love offering is designated to so-and-so who is our singer for this event, then that's not tax deductible. Remember, it is a gift earmarked for a particular individual. Okay, so that's not tax deductible. However, we might call it, concert love offering. And we control the gift, then it can be tax deductible. So let's take a broader example. Let's take a revival. And so we have the evangelist, we have a special musician, and we've got other expenses of the revival. And, these days, our revival love offering may not be as good as we want. But sometimes the revival offering might be good. And the church controls it. And in fact, the offering envelope that we used to use that came from Lifeway said revival love offering. It didn't say evangelist love offering, it said revival love offering. So the way we used to do it, and the pastor had in mind, church leaders, pastor had talked to a couple of key leaders in the church, have in mind what we want to pay the evangelist, what we think is reasonable. And so if the revival offering was good, then we pay the evangelist, we would pay the special musician, and if it's really good offering, we might have some of it go towards expenses. If the revival offering was okay, maybe we just paid the evangelist and the musician. If the offering was not so good, we just paid the evangelist and we paid the musician and the expenses out of the budget. If it was really terrible, we supplemented all of that out of the budget. And so what I'm indicating to you is church control. Here's another part of that. Let's say that the evangelist, his rich uncle is in the congregation, and the rich uncle says, "Hey, I'll just give $50,000 to this thing, and it'll bless my nephew, and I'll get a tax-deductible contribution for it." You think that's going to work? No, because the church would have to say, "Hey, this is unreasonable compensation for the revival. We'll give part of it to the evangelist, and we'll have to do the rest of it towards missions or something." Or if that's not good enough for you, we'll just have to give you your check back. And so what I'm indicating to you is church control. The church controls the love offering. This same thing with pastor appreciation, staff appreciation. The church decides when to do that, how to do it, how we're going to divide the money. Are we divided among just the ministers? It's going to be divided among everybody who gets a W-2 from the church. How's it going to be divided? And me as an individual, I can't come up to you and say, "Hey, I don't want my money divided that way. I want mine to all go to the pastor." I can't do that. That would be designating an individual. But if I'll let the church control the money and the church decide when and how and what the circumstances are of how we do this, then it is tax deductible. So does that make sense? And for your musician, you could, if you're just going to say, "Hey, 100% of this money is going to our musician," that's not tax deductible. But if you're going to say, "Hey, this is our concert love offering, and if we receive more than is reasonable, then the rest of it will go maybe to do future concerts, Christian concerts." Or the church is going to control that.
Okay, say you have to have a ticket before, and people buy the tickets, they write you a check, they want it to come, they want to put that toward their contributions, but it's for the concert. That is not, is it?
Probably not, but what did they receive in return?
Well, they received the concert.
Okay, so what is a concert? Now, so is it a worship service? If it's a worship service, then that is a deductible contribution. If it's a worship service and the church controls it.
Okay.
Okay?
All right, see, I've seen one here lately that says, you're gonna pay such and such at the door, and then they're
buy the
gonna take
ticket
up
cheaper?
a love offering.
Okay?
So, if you wrote a check for the ticket at the door, then you wrote a check for the love offering. What
What are y'all charging for the ticket? Like 10?
I think that's what it was.
Okay.
This isn't at our church, I've just seen it
Oh,
somewhere
you've seen
else.
it.
and I'm trying to explain it to somebody else that,
Okay, here's
Whether
my
it is.
suggestion. If you're just charging $10 for the ticket, I wouldn't put that on people's contribution statement. Because they did receive something in return. If it's a Christian concert, it really is a worship service, so I could, but $10 isn't a whole lot of money. I prefer just not to have to do that. Or we could say this is a worship service. The ticket is just so we'll know how many people are coming. That's our real purpose, and we want to give them contribution credit for that because it's a worship service. Then we could if we wanted to. And the love offering towards the concert would be a tax deductible offering as long as we're controlling it.
okay.
Now, so we could if we wanted to. One of the other wordings that the IRS suggests, I'm always harping on this wording, no goods or services were given in exchange for your contribution. But there's an alternate wording the IRS says. They say only intangible religious benefit is given to the donor in exchange for this contribution. And that intangible religious benefit is the worship service, the communion, cup and little cracker, things like that. Those are given in exchange. See how that one plays out?
I do.
So you could, if you're just doing $10, I probably wouldn't. Or I'd want to just do it for everybody and say, this is a worship service, so we're going to. That's my thought. So we can do things like revival love offering. We can also do benevolence offering to a needy person. Now, if we do benevolence, like we talked about earlier, if we do benevolence towards a staff member, yes, we can do that, but it's got to be controlled, and whatever we do is going to be taxable when it's towards a staff member. When it's a non-staff member, it's somebody else, then that can be tax deductible as long as we control it. And so we should say to our people, hey folks, this love offering, it is going to be tax deductible. But you need to know that if we take up more than what is needed for this particular need, you'll just know that you're helping other folks who are in need. And so that's the way the church controls that money. Okay, so giving has got to be unconditional on the part of the donor and to and for the use of the church, and that means that the church controls it. Okay? Any questions about, this always is a lot of questions about love offerings. Okay. So let's go to page 50, is it 51? Substantiation. Yes, 51. Substantiation. So top of the page, 51, it says something that's really weird. This is not so weird. Contribution statements must be received before they file their return. But the IRS uses a term called, and I explain that in this paragraph, they use a term called contemporaneous. Contribution statement must be contemporaneous to the fact that they claim it on their taxes. Now, what that means in my mind is we got to send out a contribution statement every week, but that's not what it means to the IRS. What it means to the IRS is they must have their statement in their hands before they file their taxes. And if that person doesn't, and then they're audited, the IRS could deny all the contributions. And that person's saying, hey, wait a minute, I can prove, here's my canceled checks, here's how I can prove that I made those contributions. I did make it, and the IRS says, yeah, we don't doubt it, but you didn't do the proper procedure, so therefore we're denying all of it. And they can do that. So we as a church, we want to do this in such a way that we try to help them not to have their contributions denied. And so let them know, please have your statement in hand first. But that also means we should get the statements out by the 31st of January. Now, that's not a legal requirement, but it is recommended by the IRS that we get them out by 31st. Somebody had a statement or a question or something?
Well, I was gonna say, but that is just if the donor's gonna itemize, right? Because if they don't, if they just take
Right.
standard deduction, it won't really matter. But if you've got
Right.
a donor large enough, especially, I guess, then you would want to make sure they have that.
Yeah, it's, if they're going to itemize, then it becomes a concern. Right. And also, another concern that kind of makes it show you how much importance there is in these statements, down the bottom of page 51, it says that if the gift is $250 or more, the IRS will only accept the church's statement. They won't even accept the canceled check at that point. So this is very, very important, what we do in terms of providing statements. Yes, ma'am?
We have recently, we use Shelby Next, and there's an online directory option. The membership who are involved can see names, addresses, pictures. They cannot see the private information, but on their own information, they can see private, so they could have their statement in hand any time of the year.
Yeah.
So it would not necessarily be on our church letterhead, which, sent out by us, but wouldn't that still qualify as having it in hand?
Yes,
Okay.
it does. The IRS also has a statement that there's no particular form.
Okay.
Computer generated is fine, even email is fine as a statement. And in fact, the church that I go to now, they do everything online. Except for a personal note for the pastor the first time we went, I have not gotten one piece of mail from the church in almost, 3.5 years. Not one. And our statements are online.
That's sad.
So that's okay. Did you say that's sad?
That you haven't gotten a note, yeah.
Well, it's just weird. Now, no, I appreciate the personal note, but if you see,
I'm just a hard copy.
well,
I still think-
I have been all my life.
They're still usually.
Yeah, I have been all my life, and this is just
True.
strange to me, but when we think about younger adults,
You must not have a elder congregation.
that's right,
Because
it's a very young congregation.
ours is mostly
Yeah.
elder, and some of them don't even have a cell phone, much less a computer.
Yeah,
So-
yeah, it's different, it's been an adjustment, but it's good. It's a good situation. All right, now, so what has to be included in that statement? And so it's gotta have the name of the organization, and now here's the way I say it. You gotta have the name of the organization, and then for each donation, you've got to have the date and the amount, and itemize every gift. The IRS actually says you don't have to itemize unless the gift is $250 or more. So you could aggregate all the gifts less than $250 and itemize the ones that are $250 or more. But for simplicity's sake, just itemize them all. For clarity on people being able to track what they've given and when, and the dates and the check, and all that stuff, just do them all as itemized. That's just so much simpler than trying to figure out, do we have to itemize it? Can we aggregate part of this? Stuff like that. So in your book, it just says to itemize them all, and that you're required to do that. Okay, so that's what's got to be on the statement. And then Very important, down here in bold, bottom of the page, no goods or services were given in exchange for your contribution. That must be there. Had somebody a few years ago that said, our printer cut that off and it didn't print. Do I have to print them all over again? Yeah, I'm afraid so. Afraid so, you've got to. So it's gotta have that wording on there. Now, let's move on to, we've talked some about when they did get something in return. I do want to call your attention to pages 55 and those pages about contributions which are non-cash, contributions which are gifts of automobiles or vehicles. That also, basically anything with a motor. So a boat, you know, any kind of stuff like that, vehicle, things like that, you would use this pattern. And what you're gonna have to do is a Form 1098C when it's a gift of a vehicle, and that's the one that's different. But if it's $500 or more, they've got to get the 8283 done. If it's $5,000 or more, the donor's got to get the appraisal. So that's just for you to have a checklist. And don't worry about those pages. Most of that stuff is not your responsibility, but that's just to know, and you might want to help your donor to know what to do. Okay, now let's look at mission trips. These are talked about. What page is it?
48.
48? Okay. Okay, so a mission trip is a tax-deductible contribution to the church. So camps, retreats, payments for things that we do, events, those are not tax-deductible. But a mission trip is. And the mission trip, in order to qualify for that, should be at least a 6-hour workday or at least 80% of the itinerary devoted to the mission work. And when I say mission work, it's what you're doing. You're doing VBS, you're doing church planting, you're doing disaster relief, you're doing whatever work, you're doing evangelism, any kind of mission work that you're doing, that's what, and a combination thereof counts towards that 6 hours of work or more. Many of our mission trips are 8 to 10 hours of work, but should be at least a 6-hour workday, or should be 80% of the itinerary. I got a question just recently, and the mission trip was about a 3 or 4 hour workday. We talked through it and kind of evaluated, hey, this is not a mission trip that's going to be tax deductible. And then the guy actually called the organization putting it on. They had that question before, and they gave him the answer, hey, it's not a mission trip that's tax deductible, even though we call it a mission trip. They were going to do about 3 to 4 hours of work. So you need to meet that definition. Otherwise, it's not tax deductible. Then the second thing is, for whom is it tax deductible? And so you see here on this page that for the parent, well, for the adult going, them paying their own way, that is a tax deductible contribution. Should be non-refundable. For the adult who's not going, they just want to contribute, then that is a tax deductible contribution, but they cannot designate a particular individual this goes to. They just give to the mission trip fund, and the church leaders decide for whom it goes to help that person go. Or maybe it helps everybody go. The leaders decide that. And then, what about a parent paying for their child to go, teenager? Is that tax deductible? And this is the way that Hammer is saying it now, and I put it in your book the way he says it. It says it is not tax deductible unless it is non-refundable and it is an unconditional gift given to the church for the mission trip. And that, it is a legally binding arrangement. So parents, you can't ask for your money back if your child can't go. And we need to say that up front.
But it's not unconditional because you're paying for your own child, you're naming who you're specifying.
Yeah, now this is an exception to that rule. And it's an exception it's an exception that I'm paying my own way. That I'm designating an individual, me. But this is an exception. It's an exception because a camp or a retreat or event, those benefit me. But a mission trip is not about me. A mission trip is me serving my church for the cause of missions, and this is just what it costs to do that. So I'm volunteering my time, and these are just my expenses to do that volunteer work. And that's why it's tax deductible. Even if I'm paying for myself, even if I'm paying for my teenage child, it is tax deductible as long as it's non-refundable. So we need to tell people up front. I had Frank Somerville, who's another one of my favorite people, tax attorney, and he said it this way. He said, churches need to decide, are we in the mission sending business? Are we in the travel agency business? And the way he explained that, he said, if we're in the mission sending business, then nobody wants their money back because they're giving unconditionally. They're giving to the mission trip. They're not, it doesn't matter if I go or not, I'm giving towards the trip. I want to go, hope to go, but if I don't go, I'm not going to even ask for my money back. But if we're in the travel agency business, then we're arranging trips for people. And yes, it's not a tax deductible gift, but we could give them their money back. So what he was saying are you in the mission sending business or are you in the travel agency business? What he was saying is we need to make a decision about this. We can't do both. And most of us want it to be tax deductible. So therefore, we're going to make it up front known that it is non-refundable. Okay? What questions do you have about mission trips? Everybody okay?
This is not exactly, I guess I've never heard you say about camps in mission, say not on camps. We just sent 40 people to Strength to Stand in December. Anyway, it had to get a bigger house, blah, 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 blah. It ended up costing more than what the kids have been said. So our youth pastor just, put out, we needed some money. Because we have people all the time saying, what can we do, how can we give, whatever. They gave just to our designated youth fund, which, which our church supports. And we knew it was going to be used for. But that's a tax deductible.
That is tax deductible.
Okay.
Mm-hmm.
That's not sure.
So, youth camp, I'm a parent paying for my child, not tax deductible. But once I pay for my child to go, I could give, hey, here's $100, use that to help in any way that you need it, or to help somebody to go, or something like that. That is a tax deductible gift. Or say I don't have any kids, which I don't have any teenagers now. And I say, hey, here's $100 to the youth fund. If you need it to help kids to go to camp, that's fine. Well, that is tax deductible. But when I'm paying for my own or my child or that sort of thing, that's not tax deductible. Okay? Is that okay? Everybody all right? Okay. Now, let's go on to some good news. Well, I mean, that's good news if you're paying for a mission trip. Designated contributions, and I'm gonna skip on to this. Repurposing designated money, page 48. Whenever a church experiences a bad time, they often want to go to their designated money. Hey, we need that money. We need a new roof, or we need this or that. Our giving is down. And so therefore, we need to go to designated money and take that, we need to take that money and use it. We need to use that money to pay bills. This happens very often in churches. And the thing about designated money is that it is actually a contractual obligation that the church has said, hey, we'll let you give to a designated fund, youth fund, to a mission fund, to building fund, to this fund or that fund. We'll let you give to that, and we'll promise that we'll use your money for that purpose. And so the donor can't make that designation unless the church has first given permission. They've set the fund up, given permission to the donors. And then once they do, the church is promising that we'll use the money for that purpose. We can't use it for another purpose. We can't borrow from it. We can't do anything with that money except for that purpose. So what if we do want to change the purpose of some money that has been given to a designated fund? Maybe we just feel like we need the money. Maybe we don't need the money for that purpose. We've long decided not to do that. Or the reason for that money has stopped. What do we do? What do we do with the money? And all kinds of reasons that we might want to do something with some designated money. So the basic rule is, and your book doesn't have the final information I'm going to give you here, but the basic rule is you've got to have a two-step process. You vote as a church to abandon that project, and two, you get permission from the donors. That's the hard part, because we don't know who the donors were, and this was 10 years ago, 20 years ago. Many of them have left, some of them are deceased. We don't know how to contact. So how do we ever do that? And so if you repurpose the funds without the donor's permission and vote of the church, Frank Somerville said in some cases this is called fraud, and in some cases it's called theft. So don't do that. So first of all, and on pages 51, I think it is, or 50, I've got some possible designated contribution rules that you might want to go by, suggesting that we have broad categories for our designated funds. Let's say that your church set up a fund for choir robes years ago, and now you don't want choir robes. They're hot, they're uncomfortable, we don't want them, or we don't have a choir anymore, or we're doing something different. What do we do with that money? Well, we shouldn't have set it up as a choir robe fund to begin with. We should have set it up just simply as music ministry. And then no matter what happens, we can use the money for that purpose, for music ministry. And so there's things that we shouldn't have done to begin with that now we've got a problem. I was with Baptist Foundation folks, and they told me this is one that they have used. There's actually an Alabama law. I didn't know about it. Jim Swedenberg didn't know about it. And we found out about it. The foundation has used it before. And so y'all might want to take a picture. This is going to be in the new book, but y'all might want to take a picture of this. And I'll leave it up on the screen. That this is Alabama Code Section 19-3C-6D, you know, all that. You know, designated, that it addresses designated gifts. And what it says is that if you have a designated gift and it has become impossible to use for that purpose, or impractical, or unlawful, I don't know what gift that would be, but unlawful, impractical, impossible to achieve, or wasteful, then the institution may notify the Attorney General of Alabama, and 60 days after that may change the designation. Now, the fund must be less than $50,000 and more than 10 years old. So this is not going to help you with something that's 5 years old. It's not going to help you with something that's $100,000. But it will help you. This is sort of a fairly narrow circumstance, but yet, you know, that would certainly deal with the choir robe fund that we don't want anymore. It would deal with those kinds of funds that we don't want anymore. And so then the use of the money must be in a manner consistent with the charitable purposes expressed in the gift instrument. So, like for example, we had the choir robe fund, we're not gonna do choir robe. That money has been there for more than 10 years. It's less than $50,000, and we want to change it, and we have had a vote of the church, but we can't contact all those people because that money's so old. Then we could change that. And to change it to purposes expressed in the gift instrument, we might want to change it to music ministry or worship ministry or something pretty closely related. And then we could change that designation. Now this is good news, isn't it? This is very good news for many of us. I often ask, how many of you have designated funds on your books that you don't know what to do with? And that's almost everybody. And the most I've heard of was over 100 designated items.
Oh my God.
In one church. Wow. So.
Does it have to be changed to another designated? It couldn't go back to the general fund?
Could go back to the general fund. It could. But what you do, now 60 days before you do that, you've got to notify the Alabama Attorney General. And what it does is it gives the Alabama Attorney General's office notice, but it also gives them an opportunity to say, hey, you can't do that. And, or we think that you could use the money, it would not be impractical, it, you know, would not be unlawful, that sort of thing. They could have opportunity to respond.
So what is an example of a circumstance where they would say, hey, you can't do that?
I don't know. We don't want choir robes. We want handbells or something. I mean, I think they might, but, well, I think here's a better example. We don't want choir robes. We want to give to the Boy Scouts. They would probably say, hey, that's not really related to the purposes expressed in the gift. I think that'd be an example. Yes, ma'am.
We did have a very small savings account, I think it was around $3,000, that years ago, I mean, I don't even remember when it was established, and I've been there 18 years, but it was labeled Africa Mission Trip.
Uh-huh.
So we did repurpose it, but it still went to Africa. It
Okay.
wasn't for the mission trip itself, it was to help with the mission that our church had been involved with in Africa.
Yeah.
So we just shut down the account. They're building a school, I think, the area that our people had been going to.
Yeah, that's a good solution. I think, and then for the future, don't say Africa mission
Yeah.
trip, just say mission trip. You know, and let it be broad that if we're no longer there. Sometimes our churches support a missionary in particular. And so it might not be good for us to say the John Doe Mission Fund. It might be better for us to say the Africa Mission Fund or the Missionary Support Fund. And then if that missionary decides to go somewhere else or is not going to serve, we'd have opportunity to do something else. Yes, sir.
In relation to what she said, if we do contact the attorney general and also have the church vote, it's not appropriate to roll it into general fund. It still must be related to the original intent.
Well, I think general fund relates to all of our charitable purpose. I think probably best was my example of the Boy Scouts. Don't take this money designated towards the music ministry and say, now we want to give it to the Boy Scouts. That's a pretty far stretch. I don't think general fund is a far stretch. I kind of have a little preference for, okay, it's not going to be choir robes, it's going to be music ministry. I have a little preference for that that's kind of closely related, or it's not going to be Africa Mission Trip Fund, it's going to be Mission Fund, to keep it closely related, but I don't think this would prohibit you from putting it into the general fund. Okay? All right. What else? What other questions do you have? Y'all have been a quiet group today. Yes, sir.
She brought it up, I'm just reiterating it.
Okay.
Brotherhood breakfast of some type, and somebody says, hey, I got all the, scrambled eggs and bacon and stuff. Just, put it on my tithe record as a donation for food or something of that nature. And she said, no, I can reimburse you, you can then donate that. Is that the approach?
Well, here's what normally happens. Y'all, excuse me for 1 second. Okay, here's what normally happens. Somebody goes and buys the eggs and stuff for breakfast. They come to you and they say, would you just put this on my giving record? And what they're wanting is, they're wanting you to put it on as if it were a cash contribution. You can't do that. Now, there's a couple of possibilities. First of all, you can do it as a property donation. They gave this merchandise. They gave the eggs and the bacon and the toast and all that, you can list it all and you don't put a value on it. Now and people don't like that. They want it on their cash contribution statement. Now that is just as tax deductible as, and say they've got their receipts. And the receipts are, $57. Well, the property is still $57 worth of tax deductible donation. It's just a different form. And people don't like that though. They'd rather have it listed as if it were cash, which is not. So you could say, let me reimburse you. And then, if you want this to be a cash donation, let me reimburse you, and then you write a check for the church, to the church. Then it's a cash donation. You could do it as a property donation. And so there's a couple ways to do it. but a lot of times people are unhappy with the fact that it's a property donation, even though it's just as tax deductible as the cash. They just like the cash donation better.
So,
And it doesn't work that way. You can't say, hey, you gave $57 worth of cash when you really didn't. You know, you gave $57 worth of merchandise. And then when I list it, I'm not gonna say that it was worth 57. That's your responsibility to list that.
okay, so I can give them a receipt saying today's date and a description of what they did.
Right.
And if they scribble on it, it was, $57. That's on them. I don't put that value.
Yeah, you don't put that value on it.
But at the end of the year, I don't in any way incorporate that to their.
If you're doing a letter, then yes, you don't incorporate that into their giving statement. But some of you, like for example, ACS, these software packages probably, does QuickBooks handle donations? Do they, so QuickBooks, things like that, those companies often let you do cash donations and non-cash donations. And then when it's printed out, it will say cash donations, and then at the bottom it'll total them all. And then it'll say non-cash donations, and it will list those times that you gave a non-cash donation and what you gave. You gave a used computer, you gave this, that, and the other. And then down at the bottom of the statement, it'll say none of these, you didn't receive anything in exchange for your donation. And so a lot of times software will do that. The other alternative is a letter, like we were talking about. And so, but the general rule is I'm not gonna put it on the statement unless my software will handle it and put it on the statement as a non-cash donation. Otherwise, I'm gonna do a letter.
And then it's their responsibility to keep up with that letter all year.
Yeah.
Because you're not gonna give them another letter, are you, at the end of
Don't
the
need
year?
to.
No, that's what I thought.
Yeah, you don't need to give them another letter. Okay. So, anything else about contributions? We have more questions about contributions than probably anything else that we do. It's about contributions and designated contributions and what is tax deductible and what is not. Yes, ma'am.
Can we discuss, it says designated offering to a budget line.
Okay.
For instance, we do the shoebox ministry. And people give me money toward the shoebox ministry all year long, and then I buy the things that are needed. Is that a tax deductible contribution?
They're giving the money to your church.
Right. They're say that every week they designate $10 toward, I call it my OCC, Operation Christmas Child shoeboxes.
Okay. Uh-huh. As long as you set up Operation Christmas Child as a fund that you're.
I have a fund and a budget item.
Yeah.
Budget line.
Okay. Oh, so you got a budget line. I'm sorry.
I have
got
both.
distracted here.
I have both.
Okay, so your budget line, giving to the budget line, most churches, 99% of churches would allow that to happen. 99% of churches would, but you and I need to know that that's not as simple as we think, and might actually be a little dangerous.
Well, basically, I put it into my designated fund, and whenever it's expensed out, I take out of that fund first, and then go to my budget when that's used up.
So do y'all have a budget that pretty well covers it, or the budget's not gonna cover it?
It's not gonna cover it.
Okay,
Yeah.
okay, so that's fine. And the way you're doing it is fine.
Okay.
But let's talk about the possible danger of giving designated money to a budget line. And in fact, here at State Board of Missions, your church could give designated money to a budget line of the State Board of Missions if you wanted to. You could. It's not talked about, it's not recommended, but you could. And so I'm saying 99% of churches would allow you to do that. But here's the danger. There's a couple of dangers. The first danger is that there's a question mark about what happens to that money. So, okay, so let's say that the VBS budget line, and somebody gives $1,000 to the VBS budget line. What does the VBS director think? I've got an extra 1,000 to work with. I've got $1,000 more than I had. Is that true? Well, it might be, it might not be. What if, what if we're really struggling financially? It might not be true, but that's what the person thinks. Another danger of it is, and this happens, how many of y'all have a designated line item towards youth ministry? Okay. How many of you have a designated line item towards children's ministry? Okay, almost the same ones. Anybody have it where your children's ministry gets more money than the youth ministry gets? Anybody? No? So what happens is the youth ministry gets in $10,000 designated, the children's ministry gets in $500 designated, and what do the children's ministry people think? They think, hey, this is not fair. And now I've had children, they've grown up and they're adults, and now I have grandchildren. So I've seen it all from children's ministry through youth ministry, and my wife served as a children's minister. Long time ago, I served as a youth minister, so I've seen the whole thing. But, and I know that it costs more money for youth ministry than it does for children's ministry. They do bigger trips, they go more places, they have costlier pizza parties, but the children's people still look at that and think, that's not fair. And then your stewardship people, your stewardship committee, they look at that, and after a while, they look at that and say, hey, that distorted what we wanted to do as a church in our spending priorities. We wanted to kind of provide more money to the children's ministry, still acknowledging youth ministry, but we just felt like we were lacking in children's ministry. And then these people give so much designated money, it's so inflated the youth amount of money that children's people still feel like this is not fair to them. And so it distorts what people have gone to the trouble of figuring out a budget and where are our priorities and what do we want to spend money on as a church and what do we believe that God wants us to do. So there are dangers to it. And one more danger, my home church years ago built a wonderful, wonderful building. It was fantastic. They overstretched what they could do. And in fact, a friend of mine is on staff at Cottage Hill, and this is something that they did years ago. And they overstretched what they could do, and then for about 3 years, they were struggling financially as a church. And I know in my home church, all the different ministry heads went to their friends and said, would you give to my ministry? Because I don't have any money to work with. And so after a while, it wrecked the budget. And then my friend down at Cottage Hill, when all that was going on, he said, we don't have a budget anymore, we just got bills. And he was just talking about it. So sometimes a church has some financial problems, and the designated giving can make that much, much, much worse. Because, there's this giving that's going to a certain, I'll call it a pet project of people.
But if you have a line item set up and somebody says, and you don't have a designated, and they say, I want this to go to this line item, you really can't do that.
Well, in most of our churches, they would accept it because it's a line item of the budget. Now, my home church, when all this bad stuff happened and they wrecked the budget by so much designated giving, the finance committee said, hey, folks, we got to put an end to this. You can't give to anything but general giving, the budget, you can give to Lottie Moon, Andy Armstrong, and the building fund, which is paid off the debt. That's all you can give to. Don't do all these other designated things.
But if you, well, a good accounting procedure is not to put income and expense accounts
Oh, yeah,
in that budget because it distorts that
it
budget.
does distort it.
And you don't know what has been spent as far as budgeting that year. And
Exactly.
it can make it a mess.
Yeah, and I think if you're going to allow giving, that's another thing, I'm glad you mentioned that, Carol, because I had forgotten to mention that one. It distorts what your budget looks like. So, next year, okay, we got in $10,000 for the youth ministry, and we spent it, and then next year we want to make the youth ministry have the same budget, not realizing they've spent $10,000 more than what we were planning on. And so what we're planning on for next year is not going to work. So that does distort it. And really, if you're going to give to a budget line, you need to account for that in the way that you do your accounting of it. Yeah, yes, ma'am.
At the end of our year, the line item, the youth ministry, the children's ministry, whatever's left in that account rolls into the general fund and you start with a fresh budget.
Mm-hmm.
So that can be some of the issue too, because people
Yes.
like to catch up on their giving at the end of the year. And they might like to give $5,000 to the student ministry in the middle of December.
Mm-hmm.
Youth minister doesn't have time to even spend it.
Yeah.
And it goes away.
Yeah, and so, now that is where a designated line, non-budget line, but designated line can be useful, because it keeps that money in the youth ministry into the next year.
So it can roll over.
If it's,
Designated.
but not a designated would,
Yeah.
Is there
but a
case
budget line
size?
would not.
Okay.
Yeah.
Designated would roll over,
Okay.
but now, I'm saying these in terms of general ways of looking at things. Let's say you could have a policy, in your church, that this designated fund is in effect for 2024. At the end of 2024, we'll spend the money for that purpose. Any leftover money will roll back into the general fund. So you could have a policy like that, but what I'm saying is, for most churches and most ways that they do their designated, it usually does roll over to the next year, but not their budget line.
Right.
Okay? Anything else? All right, thank you. Y'all have these have been really good questions and very important questions, and I hope this has been a good day for you. I'm going to dismiss this in prayer, but I do want to say, hey, if you've got specific questions, if you want to come by, I'm going to just take a seat at the front, and anything that you have that you want to ask a question, feel free to. I'm not going to be in a hurry to call that off, and I want to make sure that you get your questions answered. We started out today with a card, registration card, just your name and your church, and then if you need something from Guidestone, or if you need something from me, and you want to put something on that card, then put some means for us to contact you, and we'll get those answers back to you. Now, I am doing a bunch of these conferences, so it might take me a while to get your answer back to you, but so if you need, what I'm saying is, if you need a quicker answer than that, just give me a call, and we can get that answer done very quickly. So let's have a word of prayer. We'll be dismissed, and I'll be hanging out for a little while. Father, thank you so much for today. Thank you for good discussion. Thank you for everybody who's come, and I just pray that you'll be with them as they travel back home. Thank you for all of our church workers and leaders who are doing a wonderful work. And just help us in all that we do to be good and wise stewards. In Jesus' name, amen.